I'm Tom McKenzie in London. These are your top stories. President Biden and House Speaker Kevin McCarthy are due to discuss the debt ceiling in Washington today as talks to avert a US default resume. Beijing bars firms from buying Micron semiconductors, escalating the tech clash with Washington. But Asia stocks rise after Biden says ties with Beijing are set to improve. Plus, Fed officials, including Chair Jerome Powell, signal a pause in the hiking cycle may be appropriate next month, while Christine Lagarde says the ECB's fight to tackle inflation is not over. Let's check in on these futures then. They are pointing lower by about 0.1% as they weigh up, of course, the commentary coming through from those Fed officials, the expectations of talks resuming over the debt ceiling, and then, of course, of the geopolitics of US and China. Interesting in terms of the moves on that comment from President Joe Biden that he expects that maybe there's going to be a bit of a thaw to that relationship coming up soon. You have to wonder how long that optimism is going to be sustained for. The FTSE 100 currently opening up by about 0.1%. Again, the debt talks in focus for us today after a bit of impasse over the weekend. They did have a constructive call, they said, over the weekend on Sunday between the President, of course, and Kevin McCarthy. And the two sides, we know, officials working late overnight to get that deal moving forward. The FTSE 100 currently gaining 0.2%. Over in France, losses, though, of 0.3%, and the Spanish IBEX is currently flat. We turn it over and have a look at how things are performing cross-asset, and we will as well, in this hour, check in on Greek assets, given the convincing result, at least in the first round. They may well go to a second round for Mitsotakis, of course, the Prime Minister of Greece. His market-friendly reforms, it seems, paying off, and we'll check in again through the hour on Greek assets. Futures in the US pointing lower by about 0.1%. Euro-dollar 108, and Madame Lagarde takes a diverging line from the Fed officials and saying that inflation remains a challenge in the Eurozone and pointing to at least one additional hike. Fed Chair Jerome Powell, meanwhile, seemingly siding with those voices within the FOMC on a pause in June. We know that debate amongst those officials at the Fed has been live. 423 in terms of US yields, just coming off by 2 basis points. A little bit of money flowing into the front end. Brent trading at $74 a barrel, down again by 1%. Let's get then to the details around the US debt ceiling and what transpired over the weekend, what can you expect later today. President Joe Biden says his call with House Speaker Kevin McCarthy on Sunday, quote, went well. That's as he flew back, of course, from the G7 summit in Japan. It does set the stage then for fresh face-to-face talks between the pair. Meanwhile, Treasury Secretary Janet Yellen warned the US is fast running out of cash.
Well, there's always uncertainty about tax receipts and spending. And so it's hard to be absolutely certain about this, but my assessment is that the odds of reaching June 15th while being able to pay all of our bills is quite low.
Okay, for more, let's bring in Bloomberg's Jill Deesis. Jill, when are Biden and McCarthy set to meet exactly? What's the time frame? And what do we know about what transpired over the weekend and whether things are now in a more positive direction?
Yes, thanks, Tom. So ultimately, they're expected to meet today as Biden returns to the White House. We'll see how those talks go. As you mentioned, though, it does seem like there was at least some reason for positivity. Over the weekend, you had both Biden and McCarthy say that this talk aboard Air Force One, Biden was giving him a call as he was heading back from Japan. Apparently, it went well. It was productive. That's certainly a bit of a whipsaw, a bit of a change from what we had earlier heard, which was that the negotiations happening between these sort of intermediary negotiators had stalled over the weekend. So it does feel like we're kind of going back and forth between, is there actually some movement here? Is there a breakdown in talks? But ultimately, the momentum has shifted back toward that idea of maybe there's some reason for optimism because we're ultimately approaching a deadline very quickly here.
Okay, and the Treasury Secretary, as we heard, saying that it's very unlikely they're going to get to the middle of June. Of course, you get those additional tax receipts coming in at that point, but unlikely that they're going to get there in terms of having enough cash within the balance sheet. What then are the chances, this is the multi-trillion-dollar question, what are the chances at this point that we don't indeed get a resolution before June the 1st?
Yes, well, ultimately, I have to note that these two sides are very far apart. It still seems on finding some kind of a deal. Biden was telling reporters in Japan that they've, sort of acknowledged potential spending cuts. He's saying that the onus is on the Republicans to sort of step up and then sort of, come to some kind of agreement of what exactly they want here. You're hearing some similar things from the other side. What we've heard from some Goldman Sachs analysts who are saying maybe there's a 30% chance that something could get wrapped up by the end of this week, maybe a 30% chance that there could be something by the end of next week. But ultimately, it does seem like they have to come to some kind of action. McCarthy saying that an extension isn't really on the table for right now. So yes, the deadline is coming up quick soon. So there's got to be some kind of action, at least within the next couple of weeks here.
Okay, just a 30% chance from Goldman Sachs seeing it wrapped up by the end of this week. That's pretty low odds, isn't it? As more work, of course, is needed from both sides. Bloomberg's Geodis, excellent. Thank you for the update there. For more on the market reaction to this and everything else that is feeding through into the asset moves this morning, let's bring in Emmanuel Cor, Head of European Equity Strategy at Barclays. Good morning, Emmanuel. Let's start then with the debt ceiling. And the question as to whether or not you start to play and assume that the precedent of past and past history is going to play out once again, or if you start to bet that there's a bit of complacency in these markets around the risks.
Yeah, good morning, Tom. I mean, clearly, if you look at the high level of the equity market and the very low level of volatility, it gives the impression that the market has been quite complacent into this. Clearly last week we've seen the market rallying on the hope that we will get some kind of resolution. So, we need to see that. We need to see the actual resolution, and we need to see this kind of big tail risk out of the way, I think, for the market to break out. I mean, you are seeing clearly quite a lot of caution in the bond market. T-bills have been moving up in the last couple of weeks. CDS spreads are very high in the US as well. So the equity market seems a bit complacent compared to the bond market, and to some extent the asymmetry, I guess, around this debt ceiling impasse right now is definitely on the downside. That if something goes wrong, or if we go into this kind of 11-hour last-minute type of negotiation, that might create some angst and stress, I guess, in the market. Look, our assumption at Barclays is that we will find an agreement. We will get an agreement. It might take some stress. It might take some nervousness in the market. We will get there. But of course, as an investor, you have to think about the alternative scenario, and definitely, given the high level of the market, you feel like the asymmetry is on the downside. Yeah.
Is there a tactical European trade around the debt ceiling?
Well, look, I think the more the kind of optimism on Europe, maybe compared to the US, because Europe has strongly outperformed the US market this year, might be partly driven by the need to hedge this more specific US risk catalyst in the short term. That yes, if you were to see some kind of default, if you go to the worst case scenario, that might hurt sentiment on the US dollar, on US asset, on US equity, on US bonds as well. Look, clearly in a very risk-off scenario, it's very hard to see Europe outperforming in the US, but yes, maybe the uncertainty around that is maybe a bit more supportive of relative performance of Europe. Yep.
And you've seen gains, again, of about 10% year to date for the European benchmark, and you've set your target at 475. We're at 468 now, so that gap is pretty small. Do you revise higher that target? Do you see further momentum?
Look, I think for now we're holding up. I mean, we think a lot of catalysts in favor of Europe have played out. You have pretty much three key drivers of Europe outperformance. The big one was the reversal of this stagflationary shock that hurt Europe last year, with gas prices, energy prices coming down quite a lot year to date, which is a big relief to the economy. The second driver was pretty much the China reopening, providing some impulse to European growth. And again, we see some weakness in the data in China more recently. And then the third one was maybe the more resilient banking sector of Europe compared to the US. So look, these things have paid out, and maybe there is less a case for strong upside in Europe. But I guess coming back to the broader, the global outlook, we're seeing that growth so far is holding up. positioning is quite light. Central banks are pretty much done with the bulk of their rate hikes. So, yeah, I think the path of least resistance is probably a higher market from here.
So you talk of those three pillars supporting European equities. One of those pillars, as you mentioned, being China. Is that the most fragile of the three pillars at this point? We look at the economic data. We see the optimism today around US-China relations. That really baffles if you look back at the recent history of the last 2, 3, 4, 5 years, where relations have just soured time and time again. One positive comment from the US president, and we're seeing an uptick in Chinese-related shares, particularly those listed in Hong Kong. Is the China pillar starting to crumble for Europe?
Well, clearly the market is much more skeptical or nervous about the China driver because, the reopening has been maybe less strong than expected, and at the same time we see very little, stimulus from China. So it looks like the kind of objective in China is not to overstimulate the economy, is to be very measured with stimulus, is to have a very long-term approach to the kind of, economic support of China. And at the same time, the geopolitics, I think, will be a bit on-off over the next few years. I mean, as they have been over the last few years. I think the market has to get used to a more unpredictable China and then less easy to deal with from a macro standpoint. So, we think Europe still benefit from part of China which are growing strongly, like the consumer in particular. But broadly speaking, yes, I think the bulk of this impulse from China reopening is probably behind us now.
And you talk about, in your notes to us, about the positioning and the flows into US equities and how some of that has not yet been rewound. Some of that could come back to Europe and prove supportive. I just wonder if we do get a pause from the Fed, and Jay Powell seems to be throwing his hat in the ring for a pause in June, does that hold that flow in the US for longer than maybe you would have expected?
Probably. And what we've seen is that usually over the long run, when the Fed is broadly done with hiking rate, when the Fed pauses its policy normalization, the markets tend to hold up. The markets tend to rally, most of the time after the Fed moves to wait-and-see mode. So, if you manage to get over the summer resilient data, but a bit more market-friendly Fed communication, that might help, risk asset and equities. Now, does it play more in favor into the US? That's a possibility because the US is a long-duration market, so more bond market stability might help things like tech, long-duration stock, which are quite a big part of the US market. But at the same time, I think Europe has some value in terms of diversification. I mean, what we have been writing about and warning about is what seems to be a very, very, polarized US equity market with a very narrow leadership. Only 30% of stocks have outperformed in the US, and they look quite stretched, quite expensive. We think Europe has a broader leadership, has a more diversified sector composition, and much cheaper valuation as well. Okay. So Europe is a good place to invest in.
The view that Europe doesn't have that heavy concentration that the US does,
right.
And therefore maybe the risk profile is slightly different. Emmanuel Court, very pleased to say, staying with us. We'll get more on his calls, particularly the view in terms of the earnings picture out of Europe. Equity strategist, of course, chief equity strategist at Barclays for European equities. Coming up, we are going to hear from Ryanair's CFO, Neil Sorahan, as well, talking the earnings picture. After the numbers came out, it was a beat for the Irish low-cost carrier. That is next. This is Bloomberg.
I don't think we can replicate Tesla. Tesla is a unique because when they founded and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
The names that move markets are on Bloomberg.
The regional banks have been under some stress, but I think the banks that have failed have had some very unique characteristics. What I see is a banking system that overall is well capitalized, still has very solid earnings, but we're monitoring the situation very carefully.
Nobody covers business like Bloomberg, your global business authority. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
We've got over 3,000 daily flights at the moment, 500,000 people being moved around, and every flight is nearly full at this point in time, so you have to book early or you're going to miss out.
Okay, words of wisdom there. But where is the demand coming from?
Well, the likes of the sun destinations very strong, particularly on outbound UK. Dublin, we've got our largest ever schedule in and out of that this summer. Central and Eastern Europe is booking very well, and domestic Italy is particularly strong this year. So all across our network, we've seen huge demand. It's been robust. People very keen to get out and about and to get a bit of sun on their back this summer.
And they're willing to pay higher fares to do that. There had long been this idea that, okay, by this point, surely the pent-up demand story is over. Are you surprised that the consumer has been so resilient and is willing to pay more for those tickets?
Not particularly. I mean, we're coming off a very low base. Our average fare is significantly lower than everybody else's. Capacity in Europe this summer is still not back to pre-COVID levels. You're looking at anywhere between 90-95% of pre-COVID levels, and I think it's going to be a few years before we get back to pre-COVID capacity. There's been a systemic change in capacity. Airlines have gone out of business or they've shrunk in size. There's more consolidation going on, like the likes of ITA being consolidated in Italy. The OEMs, the aircraft manufacturers are behind in delivering aircraft to airlines. The leasing companies are short of capacity. So I think we're going to see this continue for some time, and indeed, meanwhile, customers like yourself and everybody else are very keen to get out and about and keep traveling.
When does that run out, though? When do we finally see the end of that demand source?
Well, I don't think it is going to run out. I mean, if anything, I think people have decided after being locked up for a few years that when they looked at their priorities, that the travel is one of their key priorities, and indeed the ability now to work from home or to work from abroad has opened up the opportunity for people to be out even more than they were in the past. So this is
just a wide macro change. This is a complete regime shift in how people view travel.
Yeah, well, I mean, if you go back to the global financial crisis again, it was very clear at that point in time that your mortgage was your #1 priority. But after that, travel still wasn't sacrificed. People took the annual holiday. Now, the question mark is what happens into the winter. Will people, having had a great summer holiday, take a view that interest rates are rising, the cost of living is starting to bite, and at that stage, then maybe fares come down. But we don't know. We don't have the visibility at this point in time.
Okay, Ryanair's CFO Neil Sorahan there with his travel outlook after Ryanair's earnings beat this morning. Ryanair, one of the stocks, of course, we are focused on in the session today. Let's bring the pricing up for you, of course, on the back of a little bit of optimism. Bernstein analysts saying that they are flagging Ryanair, in their views, a pretty confident set of numbers and outlook as well for this airline. Ryanair predicting that they're going to see strong demand, as they were saying to Danny, in terms of that peak summer season. They expect that to drive about a 10% increase in passenger numbers. They do see modest year-on-year profit growth coming in the year, and they reported for the fiscal year profit of a little and around 1.4 billion euros versus a loss of 355 million euros this time last year. When it comes to NatWest, they're buying back shares from the UK government, which remains, of course, their largest shareholder after buying out NatWest during the Great Financial Crisis, 2008, 2009. So the UK government goes for owning about 42% of the shares to about 38%, and NatWest just getting 0.5%. They're buying back about £1.3 billion of their own shares from the UK government. And of course, when it comes to the pharma space, a little bit of disappointment when it comes to the London-listed Dechra Pharmaceuticals, dropping a little over 6% as they flag challenges in the first half and downgrade their previous forecast as well. They're saying they're seeing the trading environment more volatile and challenging, and taking a hit there of around 6%. Let's stay on the earnings picture then, bring back Emmanuel Kohr, Head of European Equity Strategy at Barclays. Emmanuel, we have to acknowledge that European earnings generally have come in stronger than many had expected. The outlooks, they're conservative, but margins across much of the space have proven to be pretty resilient. Does that resilience hold up? Does the momentum around European equities and the strength on the margins, given the pricing pressures of the last year or so, does that hold up in the next 3 to 6 months?
I think for now, we think it does. I mean, clearly the Q1 numbers, as you said, Tom, were very strong, with margins holding up at high level, with pricing holding up, and with most companies talking quite, I would say, positively about the outlook. Of course, no one is really going to provide very, very strong guidance given all the macro uncertainty, but we don't see a bit of kind of a cliff edge in terms of corporate earnings dynamic and guidance. So yes, we think for now, the earnings resiliency is the explanation on why the equity market refuses to fall. You know, there's so much macro angst, there's so much negativity around recession, about the kind of tightening in credit condition, that the market has been somewhat forgetting that, well, earnings so far are holding up. You have full employment, you have pent-up demand, you have disposable income, which can be deployed in spending. So obviously, you know, we need to look at the data, because there is so much macro uncertainty that at some point you will see sign of, you know, demand weakness and margin compression. But for now, we think that the resiliency of earnings can carry on into Q2 and provide at least a floor to the equity markets.
You're not seeing panic yet from those corporate executives.
We don't see.
Does that panic come through? Where are the areas of weakness? What do you avoid as we weigh up those tightening credit conditions?
Well, I mean, clearly manufacturing is one area where you've seen already for 2 quarters, you know, sign of margin pressure, demand slowing, because this was a part of the market that did over-earn during the pandemic. There was so much, you know, supply-demand imbalance that, you know, manufacturing sector did monetize this kind of post-COVID recovery very, very strong. You know, of course, there is a bit of a payback time now. So if you look at things like construction materials, chemicals, we see sign of, you know, volume and margin pressure, right? Now, if you look at the consumer, exposure is still relatively strong, again, because you have some pent-up demand in part of the economy. You know, we've seen China consumer holding up. We've seen, even in Europe, like, you know, with Ryanair this morning, strong demand for travel, leisure spending. And again, it's all due to the fact that the labor market so far is holding up. So as long as labor market, as long as employment is strong, we see consumer in a position to spend money, and we have some residual exposure to cyclicals, you know, with the consumer in particular in Europe, right? Banks have been a strong surprise as well. Again, despite all the macro concerns about recession, about credit crunch, about, you know, deposit flows, etc., we've seen banks able to make more money in the environment of higher interest rate. And banks are quite a big chunk of the equity market, and that's been a big support as well in Europe in particular.
And European banks still undervalued versus their US counterparts, at least the view of many, in terms of the valuations much cheaper, aren't they, than their US counterparts. Emmanuel Kohr, always excellent. Thank you very much indeed for joining us and kicking off the week with us here on, of course, the European Market Open. Equity strategy, chief equity strategy around European equities for Barclays, Emmanuel Kohr. Welcome back, or at least coming up, I should say. We're not there yet. I'm getting ahead of myself in terms of going to break. We've got a lot more to talk about. We've got a really interesting CEO coming through from a company in a very innovative space. We're talking about semiconductors as well, and continuing to keep an eye on geopolitics across these markets. European markets, currently, you're essentially flat as you look ahead to those talks between the US President McCarthy. You weigh up the comments from Jay Powell nodding to a pause in June. Futures in the US, the S&P even is pointing lower by 0.1%. Stay with us. This is Bloomberg.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Our studios in New York and San Francisco, our expert hosts of the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority. This month, Bloomberg brings you the latest from China's 14th Annual National People's Congress, including China's COVID recovery, economic outlook, and geopolitical tensions. Continuing coverage this week on Bloomberg.
Welcome back to the Open. 24 minutes, 25 minutes into the European trading day. Let's get the Bloomberg Business Flash now with Alex Morden. Alex.
Thank you. Good morning. Two law companies are planning to merge to create one of the world's largest legal firms with $3.4 billion in revenue. The combination of Allen & Overy and Sherman & Sterling will have almost 4,000 lawyers across 29 countries and offer US law, English law, and local law capabilities. India's shorter bonds have rallied on bets that a withdrawal of the nation's highest value currency note would leave banks with surplus cash to invest. According to one estimate, as much as $12 billion may be added to India's financial system as authorities remove the 2,000 rupee notes from circulation. Well, consumers have until the end of September to deposit those notes into bank accounts or to exchange them for other denominations. And a committee appointed by India's top court says it doesn't see any regulatory failure or signs of price manipulation in the rise and fall of Adani Group stocks. The initial findings come as a relief for Adani's empire, which has lost over $100 billion since the Hindenburg controversy. Well, shares of Adani Group companies rallied Friday after that report was made public. That's global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Alex Morgan, and this is Bloomberg. Tom.
Alex, thank you. Let's check in on these markets then. Across the benchmark, flat here in Europe, but as you break it down in terms of the individual indexes, there's a little bit more interest. UK and the FTSE 100 gaining 0.2%. We were just speaking to Emmanuel Court of Barclays. He actually sees some further upside for UK equities in terms of where we are in the cycle. Pressure, though, over in France and the CAC are down 0.2%. The futures in the US, S&P E-mini is currently down 0.1%. Jay Powell, it seems, aligning with the voices on the FOMC saying that a pause in June would be appropriate. I'm paraphrasing, but that was the nod from Jay Powell. Plenty more coming up. Stay with us. This is Bloomberg.
politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time, join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Limes.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that. Really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
DOJ or other authorities
could face bigger challenges next.
It was going to keep rain welcome.
This is a 3 as the economic picture does.
The OK is getting ready to make
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Welcome back to Open. We are 30 minutes into the European trading day, and here are your top stories. President Biden, House Speaker Kevin McCarthy are due to discuss the debt ceiling in Washington today. That's as talks to avert a U.S. default resume. Beijing bars firms from buying Micron semiconductors, escalating the tech clash with Washington. But Asia stocks rise after Biden says ties with Beijing are set to improve. Plus, Fed officials, including Chair Jerome Powell, signal a pause in the hiking cycle may be appropriate next month, while Christine Lagarde says the ECB's fight to tackle inflation is not over. So a divergent picture from the bosses of the two most powerful central banks globally, of course. Really interesting that Jay Powell seems to be aligning with those on the committee looking at a pause in June. Of course, there's more data to come through before that decision. Here in Europe, flat across the main benchmark as we weigh up what is happening in terms of the debt default ceiling, those talks later in Washington, and a slightly more positive nod from the US president on US-China relations. Whether or not that optimism that we've seen reflected in Asian shares on the back of that comment can really be sustained, I think is a valid question. The DAX currently down 0.2%, but it's a slightly brighter picture here in the UK thanks to the healthcare sector, gaining 0.2% on the FTSE 100. NatWest, by the way, within the banking space, buying back some of its shares from the UK government that remains the largest shareholder. Let's split things over and see how things are breaking down on a sector basis. Oil, by the way, under pressure once again. Third straight days of losses, particularly pronounced on WTI. The last time I checked, that was down a little over 1%. Consumers, in terms of the sector, is leading the charge. 0.5%, modest gains there. Healthcare, as I said, near the top as well, 0.5%. About half of these sectors, though, in the red. Basic resources under pressure, 0.8%. Let's get to geopolitics then, and what we heard around China. China delivering its latest salvo in its semiconductor battle with the US, barring the operations of key infrastructure from buying Micron chips after they failed a security review. In comments earlier this hour, China's foreign ministry reiterated that a review of Micron is necessary for national security and accused the US of lacking sincerity in asking for talks. Let's bring in Bloomberg's Mark Champion then. Mark, what else has Beijing been saying about the rationale for banning these chips?
Well, essentially, they've been, as you said, saying that there's a security issue. In the broader context is that this is a fairly long now tit-for-tat battle where the U.S. is trying to limit China's influence in technological sectors by reducing their access to chips. So, if there is optimism of the kind that Biden spoke about at the end of the G7 meeting, after, importantly, this China decision was made. It's really in the sense that he's not escalating. He's decided not to to respond directly and escalate at this point, at least, and has said that he sees chances for moving on. There's been some meetings already. Jake Sullivan and Wang Yi, the Chinese foreign minister, they met in Vienna, and they talked about ways to put the balloon incident behind them, which really derailed an earlier effort to stabilize relations.
Okay, so you touched on the outreach between the two sides. There is you could make the argument that it's pretty premature in terms of the market reaction, particularly in Asia, on optimism around US-China relations, given where we've been in the last couple of years in terms of ties between Beijing and Washington. What do we make then of the comments from Joe Biden, and what do we know about that further outreach between the two sides, and whether in fact there can actually be material progress in closing the gap?
Well, we don't know if they will. As you say, this has been very tough. They've tried before. They were, on a track for meetings and so on at a very high level when the balloon incident occurred. But it's clear that at least there is an effort underway on the U.S. side to to get past that. Biden at the G7, he described the balloon incident as silly. He wasn't saying that the U.S. was wrong in shooting them down, but he was clearly sending a signal that the U.S. wants to move beyond that and beyond the kind of loss of face that China had over the shoot down.
Okay, Mark Champion, thank you very much indeed for the context around these comments and what we've been seeing in terms of that ban by Beijing on Micron and products from that company. Let's stay in this space, though. It is critical, of course, to the global economy. Semiconductor story, of course. We're going to stay here and bring in Chris Miller, the author of Chip War, The Fight for the World's Most Critical Technology. And really, if you want an understanding of where we've been and where we're at, this is a fantastic read and really gets you up to speed on what has happened historically and got us to the point we're at today. Chris, really great to have you in the studio on a day when we have this big news around China's response to Micron. Retaliation is the way that the US has characterized it. What is your assessment first? Let's start with the news of the day around the treatment by China. Are they shooting themselves in the foot? They're desperately dependent still on semiconductors from the US and US allies. In fact, they import more semiconductors than they do oil. What do you make of this decision to ban Micron?
Well, first off, we don't know how comprehensive the limitations will be. China said it'll ban Micron from certain critical infrastructure, so it's not yet certain how wide that ban will actually be. But China has targeted Micron because the type of chips they produce are also produced by two Korean companies, Samsung and SK Hynix. And so the Chinese are hoping they can just buy the chips from other suppliers, hurting Micron but not hurting themselves.
Okay, so they can do that because they have the backup. But for other parts of the semiconductor space, the other parts of the China reliance, it's not that simple. They are still reliant on the US, on Japan, on the kind of equipment provided by ASML, for example, in the Netherlands.
That's absolutely right. When it comes to manufacturing equipment and also many types of processor chips, which are produced largely in Taiwan, China is critically reliant. And so if you look at AI chips, for example, the types of semiconductors used to train AI systems in data centers, China is hugely reliant on imported chips, which is why the US is trying to cut them off.
And for that, in terms of AI, I mean, that's fascinating, given all the hype, some would describe it as hype, but also, of course, the material changes we're seeing as a result of ChatGPT, large language models, generative AI. We know that NVIDIA is central to the production of chips that are really in demand, or at least useful for those AI applications. Is NVIDIA the company that is providing these chips to the US? Is that where China is reliant on those NVIDIA chips at this point for AI? And how far are they in terms of closing that gap, particularly and specifically around AI chips?
Well, the whole world is reliant on NVIDIA for AI chips, not only China, the US, Europe, everyone is. Most large language models are trained, at least in part, on NVIDIA's GPU chips, and China's far behind, both in terms of designing chips, where it's less advanced than NVIDIA, but also manufacturing, because most of NVIDIA's chips are manufactured in Taiwan, where TSMC has capabilities that no company in China can match.
When we talk about the amount of money that China has funneled into its own semiconductor efforts, and Bloomberg has done his own excellent reporting on how that hasn't really ticked all the boxes that Beijing officials had hoped, that much of that has failed. There's been corruption scandals at places like Tsinghua Unigroup, SMIC, of course, one of the big hopes of Beijing has been sanctioned to some extent by the US. How far is China away from having the most sophisticated chips and ending its reliance? I'm thinking 5 nanometers and below.
It depends where you look in the semiconductor supply chain. It's closer in memory chips than it is in processor chips. But when it comes to processor chips, including AI, accelerators, smartphone semiconductors, China's made very little progress in catching up to the manufacturing capabilities of TSMC in Taiwan. Over the last decade, China's basically had the same gap with TSMC year after year. And so there, China's not actually catching up. It's spending lots of money. It's building out its manufacturing capacity for low-end chips. But at the high end, it's hard to find evidence that China's actually making progress.
And what you do in your big book, in Chip Wars, is really chart the history. And it starts with the innovations in the US. And then it moves on to the battle for supremacy with Japan. And Japan starts to take the lead in many areas of this ecosystem. And then you move on to China. As you look back at the history of building out semiconductors and the ecosystem around it, what does it tell you about the moment we're at today? It's not new that we've had tensions and rivalry, but this moment seems more pertinent, more salient, arguably more dangerous.
I think that's right. If you look at the previous instances of trade tensions around chips, they've been between countries that are geopolitical allies, like the US and Japan or the US and Korea. The US and China is a different story. They're geopolitical rivalries, and both policymakers in Washington and in Beijing think that semiconductors are important, not just for smartphones or AI, but also for military and intelligence use cases. And that's why they're politicizing supply chains in a way that we haven't seen for decades.
So it's concerns around dual use, particularly when it comes to military use. When it comes to the CHIPS Act in the US, so that financial backing for the industry, and the EU's response, and here in the UK we've had what is comparatively small financial backing coming out last week with our own semiconductor strategy. What do you make of these plans in terms of addressing some of the reshoring of this supply chain? Is it the right response?
Well, every major government, US, EU, Japan, UK, is announcing a semiconductor strategy and putting billions of dollars behind them. I think it is the right response given the concentration of chip making today. Today, 90% of the world's most advanced processors can only be made in Taiwan. There's no other industry that's so important and also so concentrated.
Okay, Chris Miller, really appreciate you coming into the studio. And again, well worth reading the book if you want to have a deeper understanding of where we were and how we got to where we are now around semiconductors and the implications for this global economy. Chris Miller, author of Chip War, The Fight for the World's Most Critical Technology. Another major story for us today is what is happening politically in Greece. So a win for Mitsotakis and the back, of course, of his market-friendly reforms. This is a growth picture that has transformed in Greece. Of course, he would be taking the credit for that. Syriza, the opposition party, underperforming. They may go to a second vote, but you're seeing the reaction in the bond markets in Greece with some money moving in to Greek bonds. You are now near investment grade in terms of the status. They haven't got it yet, but they're closing in on that. And largely, again, the Mitsotakis government would say as a result of their reforms. You're seeing yields coming in then on Greek debt as money moves in, and the markets welcoming the election results out of Greece. Again, it could well go to a second vote. He and his party, Mitsotakis, got around 41, 42%. Syriza, the other opposition party, got around 20%, underperforming. So we'll see if it goes to a second vote. For the moment, there's a little bit of relief coming through for these markets on response and as a result of the politics of Greece in that election over the weekend. Coming up next, we're going to speak to the CEO of Polymateria. It's a UK-based startup focusing on combating the problem of global plastic pollution. It's really fascinating in terms of where some of the global manufacturers of plastics may be moving in terms of a more sustainable use case. We're going to speak to the CEO, Niall Dunn. That is coming up next in a couple of minutes. Stay with us. This is Bloomberg.
What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. a lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I try and play that role.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets. China open.
This is Bloomberg Technology. And welcome to Balance of Power. This is Bloomberg.
Welcome back to the Open. Now, the Qatar Economic Forum kicks off on Tuesday, drawing together business executives and global leaders as they shine a light on the world's biggest challenges. We're going to bring you key conversations from the event, including the Saudi Finance Minister and the Prime Minister of Hungary. Stay with us, of course, for coverage of that across the week. Let's take a look now at some of the key things markets are watching this week, as well as the QEF, of course. Today at 1:30 p.m. UK time, St. Louis Fed President James Bullard will speak on the US economy and monetary policy at an event in Florida. Interesting, after Jerome Powell seemed to suggest that a pause in June is appropriate. Tomorrow, we're going to get a host of flash PMIs from around the world, including the US, UK, and Europe. And on Wednesday, the minutes from the FOMC's March meeting will be published. We're also going to get UK CPI data. On that data out of the US, of course, Neil Kashkari as well, speaking to the Wall Street Journal over the weekend, suggesting that a pause in June to assess the impacts of hikes so far would be, as he characterises it, appropriate. So seeming into line there with Jay Powell. Of course, we're getting more data out to inform that view before that decision and meeting in June. On Thursday, the Turkish Central Bank will deliver its latest policy rate decision. That, of course, after Erdogan's pretty solid first round in terms of the elections there. The presidential election is going to go to a runoff vote as well. We'll be monitoring that for you. And on Friday, there's more data from the US with an update on PCE and durable goods. Let's check in on how Greek assets are performing. Again, on the back of, we go from Turkish politics to Greek politics because you had the vote over the weekend. And Mitsotakis, the Prime Minister, of course, of New Democracy, the party there, performing better, arguably, than many would expect. Certainly his opponents, Syriza, led by Alexis Tsipras, performing less well than some had expected. It looks like it may go to a second vote, but it is, and he did campaign, Mitsotakis, of course, on the back of his pro-market reforms, and the Greek economy, one of the best performing European economies, and closing in as well on investment grade status. So we'll see how things transpire as they head, it looks like, for another vote in Greece, but a better performance for Mitsotakis than some had expected, and markets are welcoming that, as you can see, in terms of money moving in to Greek debt. Now, the OECD says we're going to use over 400 million tons of plastic, 400 million tons of plastic every year, and only about 10% is recycled. Polymateria, though, a spin-out from Imperial College London, has recently raised £20 million in Series B funding to scale its tech for making biodegradable plastics. The CEO says he wants the firm to become the Tesla of plastics, and we're joined now by the CEO in the studio, Neil Dunn, Chief Executive of Polymateria. Neil, great to have you in the studio. Thank you for coming in. You've raised this money back in April, £20 million. What are the challenges around commercialising this product?
Well, I think partnership is the key, Tom. Just last week, we signed a deal with Lotte Titan, the chemical company in Malaysia, because one of the unique features is being able to develop the resin at point of manufacture. So this is really important for scale, that you change the fundamental nature of the resin, and working with partnerships such as Lotte or Indorama, where we have a fantastic partnership on those non-woven materials, those masks that we all had to wear for a period of time, and tea bags, diapers, those types of materials. So those big partners are the number one or number two player in either their market or in the material, and we spend a lot of time getting the technology right to scale through them.
You do have a unique technology. Biodegradable plastics have been around for a while, though. Your technology is slightly unique. Explain to us what exactly it does, how it sets you apart, and where that demand is coming from.
Yeah, so there's three things that really make the technology different. The first is we can time control it. So this allows consumers, but also end-of-life scenarios to have every chance of happening. So we can predict the exact month within which the technology becomes active. So that could be February next year or January in 2 years' time.
So the plastic bottle doesn't just disintegrate in your hands when you're holding it.
It gives the stability for a set period of time. And then once time is up, what we've actually figured out is how you attack and destroy the crystallinity. So a lot of technologies failed because they were leaving the crystallinity intact, which creates microplastic. So what we've done is figured out how to take that back to a wax-like state. And then the third thing is we make that wax act like a prebiotic. So microbes, fungi, and bacteria will attack it and assimilate it and get it fully back to nature.
When it comes, we're in an environment, of course, we were talking about recession risks, about slowing growth. Inflation, of course, has dominated over the last few years, and it remains, of course, salient for many companies. How do you make the case that they should be adding cost to their production?
Well, I think the cost is very competitive. When you look at what the competition have been doing for 20, 30 years, it's about 300% the cost of traditional plastic, up to 600% cost. Our incremental is only about 10%. Now, that's for the B2B partners, but for the consumer, they barely even see it. So we also work very closely with governments, creating new standards and new legislative frameworks where when plastic is banned, they will give exemptions for biodegradable materials like ours, which basically means you either close your factory or you work with new innovators like Polymateria.
And you talked about the backing you're getting from governments like India, backing, as you just mentioned, around from companies in places like Malaysia. You need, don't you, surely, to have the buy-in from companies like GSK or GlaxoSmithKline, I should say, Unilever or Procter & Gamble, for example, companies that produce the vast majority of the kind of plastic-incorporated products that we use every day. Are you getting close? Is that the kind of deal that you need to really accelerate and get this mass market?
I'm very confident I'll be back to you later this year, Tom, announcing that we have launched with one of the largest brands in the world. So downstream of Indorama, we're now working really closely with their big customers, some of the largest users of nonwovens in the world, to launch the technology in everyday applications like baby wipes and diapers. And that is a Q4 objective, not just for us, but also for Indorama.
Well, and what are your kind of priority markets at this point?
Well, really anything that kind of, well, it's the materials that wind up in nature. So those materials are, in this part of the world, you know, recycled or going to landfill or being exported all around the world. I think the other thing that we're seeing is global consumption is being shipped out to the global south. And then, you know, in countries like Malaysia, 63% of plastic is winding up in nature. In Philippines, it's 83%. So we've really focused on those materials that are most likely to wind up in nature and making sure that we are developing solutions in the parts of the world and in the markets that are going to carry the greatest risk.
What is the funding environment like? You've raised 20 million. Are you looking to IPO? What's the time frame in the IPO? Would you look to the UK? To the IPO? Is the UK still an attractive business destination?
UK is very much an attractive business destination, but really the volumes are in the global south. I mean, these big partners, you know, the likes of Indorama or in Thailand, our lead for the Series B round was the Temasek-backed Impact Fund, ABC Impact. So this is really the part of the world that you can just see the issue every day. You look outside in the streets and it's all around you. So they need no convincing that the issue exists and that credible innovation is needed. So in terms of our funding options, we're very close to those industry partners, so we'll continue to deepen our partnerships with them. And we've also started working with a very large investment bank to consider our funding scenarios going forward. Nothing is off the table at this point.
Neil, fantastic stuff. Thank you very much indeed on the latest around polymaterial. Really interesting company to keep an eye on, particularly on the back of that fundraising in April as they try and tackle the issue of plastics, biodegradable plastics, and a spin-off, of course, from one of the UK's leading universities, Imperial College London. Neil Dunn, the CEO of Polymateria. There is plenty more coming up. We'll check in on these markets on a big day, of course, as we weigh up those debt ceiling talks and, of course, the geopolitics of US-China. Stay with us. This is Bloomberg.
Back in 1997, I was interested in the following question, which is, there are a bunch of the dinosaurs called sauropod dinosaurs, which had really long, skinny necks. So Apatosaurus is an example. They also had really long, skinny tails. So I made a computer model that showed that, in fact, the tail of these sauropod dinosaurs could actually act like a whip. A bullwhip. Now, the way a bullwhip makes that cracking noise is because the tip of the whip actually goes about twice the speed of sound. Okay. I think the way they got a date was to impress the females by making loud booms.
Welcome back to the Open. We are 55 minutes into the European trading day. Slightly more positive in terms of European equities in the response. Currently up 0.2%. US futures, though, flat on the S&P E-minis. Nasdaq futures up 0.1%. The two sides, of course, in this debt ceiling debate are set to meet later today. President Biden and Kevin McCarthy, of course, of the Republican House. We'll see if there's any real movement there as their staff met on Sunday. Biden suggesting that maybe you're going to get something of a thaw in terms of US-China relations. We'll see if that actually comes to pass. A couple of individual stocks in focus for us today. Ryanair just really underscoring the strength that's coming through for the airline sector in terms of the demand, particularly around the summer season. They expect that to drive a 10% increase in passenger numbers, so a pretty decent outlet there for Ryanair. NatWest Group buying back some of its shares from the UK government, gaining 0.7%. And Athens, look at that, storming 6% on the back of a pretty convincing win, at least in the first round, for Mitsotakis, the Prime Minister of Greece, on the back of his, what many see as pro-market reforms. It may well go to a second vote. He got 41%, but investors rewarding what they've seen so far in terms of the political outcomes in Greece. Coming up this week, we're going to speak to business leaders, of course, at the Qatar Economic Forum. Stay with us. This is Bloomberg.
say race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think that much better than when I was growing up. There's so many people who occupy areas and I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress, and somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
The top names in business are on Bloomberg.
America and China have a lot of common interests: climate, nuclear proliferation, anti-terrorism, global stability. You know, and we have differences. You know, we're capitalists; they're not. You know, and it's okay. We could sort it out, but we need to keep the Western alliances together, not just around war and Ukraine, but around strategic economic relationships, including trade.
Nobody covers business like Bloomberg, your global business authority. The top names in business are on Bloomberg.
Do you foresee a future where JP Morgan could potentially re-enter the Russian market?
One day, maybe, but it's very possible that won't happen in our lifetime.
Nobody covers business like Bloomberg. This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
We've got over 3,000 daily flights at the moment, 500,000 people being moved around, and every flight is nearly full at this point in time, so you have to book early or you're going to miss out.
Okay, words of wisdom there. But where is the demand coming from?
Well, the likes of the sun destinations very strong, particularly on outbound UK. Dublin, we've got our largest ever schedule in and out of that this summer. Central and Eastern Europe is booking very well, and domestic Italy is particularly strong this year. So all across our network, we've seen huge demand. You know, it's been robust. People very keen to get out and about and to get a bit of sun on their back this summer.
And they're willing to pay higher fares to do that. There had long been this idea that, okay, by this point, surely the pent-up demand story is over. Are you surprised that the consumer has been so resilient and is willing to pay more for those tickets?
Not particularly. I mean, we're coming off a very low base. You know, our average fare is significantly lower than everybody else's. Capacity in Europe this summer is still not back to pre-COVID levels. You know, you're looking at anywhere between 90–95% of pre-COVID levels, and I think it's going to be a few years before we get back to pre-COVID capacity. You know, there's been a systemic change in capacity. Airlines have gone out of business or they've shrunk in size. There's more consolidation going on, like the likes of ITA being consolidated in Italy. The OEMs, the aircraft manufacturers are, you know, behind in delivering aircraft to airlines. The leasing companies are short of capacity. So I think, you know, we're going to see this continue for some time. And indeed, you know, meanwhile, customers like yourself and everybody else are very keen to get out and about and keep traveling.
When does that run out, though? When do we finally see the end of that demand source?
Well, I don't think it is going to run out. I mean, if anything, I think people have decided after being locked up for a few years that, you know, when they looked at their priorities, that the travel is one of their key priorities. And indeed, the ability now to work from home or to work from abroad has opened up the opportunity for people to be out even more than they were in the past. So this is just a wide macro change.
This is a complete regime shift in how people view travel.
Yeah, well, I mean, if you go back to the global financial crisis again, it was very clear at that point in time that, you know, your mortgage was your #1 priority. But after that, travel still wasn't sacrificed. People took the annual holiday. Now, the question mark is what happens into the winter. Will people, you know, having had a great summer holiday, take a view that interest rates are rising, the cost of living is starting to bite, and at that stage, then maybe fares come down. But we don't know. We don't have the visibility at this point in time.
That was the Ryanair Chief Financial Officer, Neil Sarahan, speaking to our Danny Berger about the outlook for summer demand after the budget airlines' earnings actually beat this morning. Well, good morning from Doha. We're here for the Qatar Economic Forum, which begins tomorrow. This, of course, is a three-day event, one of the flagship events, powered by Bloomberg. It attracts business leaders and innovators from across the globe. Now, we'll also be hearing from government officials, including the Saudi finance minister and the Prime Minister of Hungary. Now, first thing is first, of course, we'll try and look at some of the dynamics where you look at global growth and where it's coming from, whether it's the Gulf or further afield. Today, equity markets care about one thing, and that one thing, of course, is the debt ceiling. We have some predictions from Goldman Sachs as well about when they think Treasury will run out of money. Now, equity markets are starting the week a bit hesitant, I guess. President Biden and Republican House Speaker Kevin McCarthy will meet a little bit later today to try and iron out some of the roadblocks in the debt ceiling negotiations. You can see European stocks pretty much flat. Talks really have whipsawed between progress and deadlock for days as time seems to be running out to reach a deal. But then we also understand from both sides that there's a real willingness to get through this. If you look at stocks, there certainly futures in the U.S. are seeing a little bit of pressure. And we have analyst notes, including UBS, saying, look, watch out for any kind of violent Treasury moves if this goes on for too much longer. The other top story, China has delivered the latest salvo in its escalating chip war with the U.S., announcing that Micron products have failed to pass a cybersecurity review. Now, Beijing has warned operators of key infrastructure against buying the American chips due to relatively serious cybersecurity risks. Meanwhile, at the end of the G7 summit, President Joe Biden said he expects ties with China to improve very shortly. So let's bring in Bloomberg's Mark Champion with the very latest on this. Mark, first of all, when you look at President Biden, he seems optimistic that they can get through this. Are there any signs that that's really the case?
Well, it's going to be tough. We've been here before. The last time they were really trying to stabilize the relationship, get it on a better footing. You remember there was the balloon incident. And here, President Biden was clearly, explicitly saying that we want to get past that. He described it as silly. Despite the Chinese decision on Micron coming shortly before he spoke, he clearly chose not to respond directly, not to escalate, in a long-running war where the Chinese would see their action as tit-for-tat retaliatory in essence. And instead, he said, we think we can get past this. So, as you say, whether he can is another matter, whether the Chinese are in the mood, but he's clearly trying.
Mark, if there's, a war on chip makers, and of course, let's put this into context. What happened with Micron is significant because China is the biggest buyer of, semiconductors in the world. Can they get on sides in terms of foreign affairs, but also have this fight on semiconductors, or do they go hand in hand?
That's the huge question. And you've had this debate recently between the European Union and the US, where they talk about, are we trying to de-risk our relationship with China, which is what the European Union talks about, or, are we decoupling from China, which has, until recently been more the US line. The question is whether you can de-risk, which is to say, we need to reduce our dependence on supply chains to China without decoupling. And a lot of that is going to be up to China and up to the kinds of responses that come, which we saw, after the balloon incident and so on. It is a really tough line to walk.
And Mark, I guess, one of the things that they really want to try and achieve at the G7 was trying to get countries like Brazil, India, and Indonesia on side to condemn Russia of the invasion of Ukraine. Did they have any success in that?
Well, you'd have to say, fundamentally, no. Nobody changed their position. Zelensky essentially, with the help of the G7, ambushed those leaders. But, in diplomatic terms, he got in the room with leaders who've been trying to avoid being in the room with him. And he at least got to talk to some of them. And that actually counts. In diplomatic terms, you have to start. You have to make some kind of connection. And, he at least was able to do some of that.
Mark, as always, thank you so much. Mark Champion there, our senior writer, of course, on all things foreign affairs. Now, President Joe Biden and House Speaker Kevin McCarthy are set to hold a new round of talks on raising the debt ceiling later today. The fresh push to avert a U.S. default comes after the leaders' handpicked negotiators met for more than 2 hours on Sunday evening in McCarthy's office at the U.S. Capitol. So are we actually any closer to a deal? Let's get straight to Kevin Whitelaw. Kevin, the mood seems to have shifted, frankly, 3 times over. We're close to a deal, we're not close to a deal, now we could be reaching a deal. Where are we?
Yeah, I mean, the mood music is a little more positive all of a sudden. It had been pretty negative going into the weekend, but after a phone call between House Speaker McCarthy and President Biden, suddenly they both came out suggesting that maybe there was some room for an actual deal. Obviously, the Republicans are demanding very steep spending cuts spread out over sort of capped for a number of years, but they want to hold, they want to allow an increase for defense. The Democrats are obviously in a very different place, saying that they don't, the country's sort of social safety net can't afford those kind of cuts.
So, Kevin, what are the chances that it still falls apart at this point?
Yeah, I mean, look, nothing is done until it's done with these things, but this is getting almost as close as it's ever come to what the Treasury has said is the day where the U.S. may not be able to pay its debts. That could be as early as June 1. That could slip until the 8th or 9th, but it's a super imprecise science at this point, and the risks are incredibly high. Both parties know it. And I think that the White House is counting on the Republicans to climb down a little bit at the last minute, but the Republicans have made a lot of promises to their own side and think that they've got a lot of leverage in this one.
So, Kevin, how firm is this June the 1st deadline? I think Goldman Sachs has said that, they'll have about $30 billion until June 8th, 9th, and $30 billion is really what they need to just function.
Yeah, I mean, I think there's odds are they may be able to squeak past the 1st, but they can't guarantee it, and that's obviously what's going to be having. The market's going to be watching it very closely. You're already seeing a lot of nervousness in the trading, and that's only going to sort of get worse as you get a little closer. Sometimes we've seen Congress and the White House get motivated when they start to see some serious market fluctuation, and so if that starts to get worse in the coming days, that could also have an impact on where this all stands.
Kevin, thank you so much, of course, for all of the insight on the debt ceiling. Kevin Whitelaw for us following the story. Now, coming up, we'll have plenty more from Doha. We're here at the Qatar Economic Forum. We'll also take a closer look at the state of U.S.-China relations as Beijing bans companies from buying Micron chips. We'll get back to that very shortly. This is Bloomberg.
I don't think we can replicate Tesla. Tesla is unique because when they founded, and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customers like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
they're each going to take, as countries, a distinct approach on China. But at core, when it comes to the core principles that unify us, there is a really underlying common approach. There are a set of very significant concerns, and we're going to de-risk ourselves. Our allies and partners are going to de-risk themselves with respect to them.
Well, that was Mike Pyle, the U.S. Deputy National Security Advisor for International Economic Affairs, speaking exclusively to Bloomberg about the G7's approach to China. Now, I'm delighted to be joined by Mark Haefele, the Chief Investment Officer of Global Wealth Management at UBS. Mark, good morning. I have 1,000,001 questions. I know we need to start about, talking about the debt ceiling, but also this U.S.-China spat. First, equities seem to be taking in their stride the fact that, there will be some kind of resolution on the debt ceiling. What if they're wrong?
Well, there's all different kinds of wrong, but I think that where you have to start really worrying is if we go beyond this point where the Treasury feels it can pay for everything, and then they start to prioritize the interest payments on the federal debt. And then, of course, that would probably lead to a market sell-off, which might sober up some of the politicians in Washington.
Mark, of course, this happens at a time where there's tightening credit conditions, where there are questions about what the Fed does and slowing economic growth. Are you optimistic about what markets can do towards the end of the year?
Well, I think we're cautious on the U.S. for a variety of reasons. As you said, the market kind of has been pricing in the good news that we've seen in the first half of the year and not really reacting too much to some of the bad news, including what's going on with the debt ceiling. Point out that tech stocks in the United States are trading 24 times forward or 30% above where perhaps they should be. So there is a lot of optimism built in at a time when, the credit conditions are tightening and, maybe the consumer doesn't quite have as much spending power into the back half of the year.
So how do you hedge, or do you hedge for any eventuality?
Well, I think that the most important thing for investors is looking at their cash holdings and looking at what they're doing on the bond side, because many of our clients, when there was negative interest rates, they weren't really looking in those areas. But I think first, because we think yields are peaking in the United States, it's a time maybe to move some cash into more attractive, longer-term bond holdings. And second, we would prefer going high-quality bonds, maybe some investment-grade bonds, over equities where we think there could be more volatility into the back half of the year.
Mm-hmm. And Mark, regionally, is this outside the U.S., or do you still see value in high-quality bonds in certain industries in the U.S.?
Yeah, I think the U.S. on the credit, the fixed income side, there's still absolutely alternatives. We would also look at emerging market bonds as well, where you get something of a yield pickup.
Mark, when you look at the U.S.-China spats, and this is a huge problem for semiconductors in the U.S., the China being the biggest market for semiconductors worldwide, does it change actually your risk appetite in certain parts of equities, or was this always going to be assumed, the case, especially in an election cycle in the U.S.?
Well, we've had many years now of kind of heightened U.S. and China tensions, and I don't think we or the market believes they're going to go away anytime soon. But, taking a step back, I think the most important thing for investors to think about is how, whether you call it de-risking or decoupling, essentially what we're talking about is making much more regional supply chains, and that means investing more money kind of to separate these two regions. And of course, at the end of the day, that is more inflationary and less deflationary. And so that has to factor into how investors think about a future. I don't think we're going back to negative interest rates anytime soon.
Are we going to be in interest rates lower, sorry, higher for much longer? The market is still pricing in cuts by the Fed at the end of the year, and then you have a lot of people on this program pushing back against that.
Well, I don't think that the Fed is going to be cutting rates at the end of the year. And if they are, it's probably because the economy has weakened dramatically. And so I think part of our concern about equity pricing, which you're highlighting, is that what the market seems to be pricing in is that the economy remains very strong, but inflation falls rapidly towards 2%, allowing central banks to cut rates. And of course, that's quite a trifecta to bet on into the back half of the year.
Mark, we're sitting here in Qatar, in Doha, because of the Qatar Economic Forum. And I know when you look at some of the emerging markets that Qatar, of course, trades with, you like emerging stocks that, benefit, I guess, from peaking U.S. rates, higher commodity prices, a weaker U.S. dollar, and also could benefit directly from China's recovery. Not every emerging market is created equal. Are there specific countries that look more attractive right now?
Well, I think the valuations in China make it attractive for us. Also, Thailand looks to be a real beneficiary of increased tourism from China. So I think some of our focus is more towards Asia. But, we do have a positive view on commodities and we have a positive view on oil. So certainly the Middle East should benefit as well from that.
Mark, thank you so much for joining us today. That was Mark Hayflett, Chief Investment Officer of Global Wealth Management at UBS. Now, we'll have plenty more, of course, from Doha. I'll be in Doha all week for the Qatar Economic Forum. We'll bring you conversation with heads of state and business leaders, including the chief executives of TikTok and Boeing. Also, tomorrow, conversation with the Saudi oil minister. Don't miss our coverage on television, online, and on the Bloomberg terminal. This is Bloomberg.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. The moment news breaks. No one covers the world like Bloomberg.
A lot of the focus and the momentum here is what to do with inflation. But again, this is still a monetary policy story.
The first round results with President Recep Tayyip Erdogan showing resilience and strength on his nationalist platform.
A number of leaders have come out on both sides of the aisle and say we will not default. That does seem like they are making progress.
Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Doha, Qatar. Now let's get straight to the Bloomberg First Word News. Here's Alex Morgan. Hi, Alex.
Hi, Francine. Good morning. Well, we start in Greece, where Prime Minister Kyriakos Mitsotakis has pummeled the opposition in the national election held over the weekend. He's moved a step closer to another 4-year term. The Prime Minister's centre-right democracy gained almost 41% of the vote, as compared to around 20% for the leftist Syriza party of the former Premier Alexis Tsipras. Well, Mitsotakis will likely opt for a second ballot in about a month, rather than assembling a coalition. The Ukrainian President Volodymyr Zelensky has insisted that Ukraine is still in control of parts of Bakhmut. It follows claims by the Russian mercenary group, the Wagner mercenaries, that Russia has taken full control of the eastern Ukrainian city. India's shorter bonds have rallied on bets that a withdrawal of the nation's highest value currency note would leave banks with surplus cash to invest. According to one estimate, as much as $12 billion may be added to India's financial system as authorities there remove 2,000 rupee notes from circulation. Well, consumers will have until the end of September to deposit the notes into bank accounts or exchange those for other denominations. And the Minneapolis Fed president has reportedly said he's open to skipping the rate hike at the Fed's next meeting in June. He told Dow Jones it would give officials more time to assess the effects of past rate hikes and the inflation outlook. But he also said he would object to any declaration that the Fed is done with those rate hikes. Well, that's global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Alex Morgan, and this is Bloomberg. Francine.
Thank you so much, Alex. Now, if you look at traders, they're a little bit on edge as negotiations restart on the debt limit, and of course, the deadline comes, sooner, closer and closer, if I find the right word. Equity markets starting the week a bit hesitant. President Biden and Republican House Speaker McCarthy are preparing to meet today in a bid to iron out some of the roadblocks. But again, a lot of these markets are actually on tenterhooks. European stocks gaining 0.1%. Coming up, the UK Prime Minister returns from the G7, facing yet another cabinet scandal. More criticism over immigration as well. Details next. What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
markets are on Bloomberg.
The regional banks have been under some stress, but I think the banks that have failed have had some very unique characteristics. What I see is a banking system that overall is well capitalized, still has very solid earnings, but we're monitoring the situation very, very carefully.
Nobody covers business like Bloomberg, your global business authority. Information you want, analysis you trust, everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
This is Bloomberg.
President Biden and House Speaker Kevin McCarthy are due to discuss the debt ceiling in Washington today as talks to avert a U.S. default resume. Beijing bars firms from buying Micron semiconductors, escalating the tech clash with Washington. Asian stocks rise after Biden says ties with Beijing are set to improve. Plus, Fed officials, including the chair, Jay Powell, signal a pause in the hiking cycle may be appropriate next month, while Christine Lagarde says the ECB's fight to tackle inflation is not over. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Doha, Qatar. So the White House and Republican lawmakers have resumed negotiations on raising the debt ceiling and preventing an unprecedented default. President Biden was asked about previous rounds of talks with Republicans at the G7 meeting in Japan.
First, we weren't making progress. Then we made a lot of progress. And then all of a sudden, they came back with a proposal that was very cut back from where they had agreed. We are willing to cut spending as well as raise revenue so people start paying their fair share.
Well, President Biden also spoke about tensions with China. Beijing has delivered the latest salvo in an escalating semiconductor war with the U.S., announcing that Micron technology products have failed to actually pass a cybersecurity review in the country. Now, President Biden said at the end of the G7 summit in Japan that he expected ties with China to improve very shortly.
We're not looking to decouple from China. We're looking to de-risk and diversify our relationship with China. That means taking steps to diversify our supply chains, and we're not dependent on any one country for necessary product. It means resisting economic coercion together and countering harmful practices that hurt our workers. It means protecting a narrow set of advanced technologies critical for our national security. And those elements are all agreed on by the G7.
Well, President Biden speaking at the G7 there in Hiroshima. Now let's get on to the UK, and the Prime Minister, Rishi Sunak, of course, returns from the G7 summit in Japan facing a cabinet scandal and Conservative Party finger-pointing over soaring migration numbers. Now let's speak to our UK correspondent, Lizzie Burden, who has all of the details. Lizzie, he comes back, and of course, it's about the Home Secretary. There are many issues that have really been front-page news of the newspapers over the weekend.
Yeah, Rishi Sunak really wanted to talk about better relations with the EU, what the UK is doing to help Ukraine, resetting relations with China. But instead, the first topic he was asked to talk about was, as you say, the Home Secretary, Suella Braverman, who the Sunday Times newspaper reported had a speeding ticket last year, and she asked her civil servant to help deal with it. Now, that's potentially a breach of the ministerial code. And you'll remember that Suella Braverman was fired from Liz Truss's cabinet last year because of a security breach. She forwarded sensitive government information via her personal email. So the attack from the opposition Labour leader today, Keir Starmer, has been, first of all, why did you reappoint Suella Braverman? Secondly, why haven't you sacked her yet? And thirdly, why haven't you launched an independent ethics probe against her?
Yeah, so what does that mean? Does he have to take a decision? For the moment, we understand that actually he still supports Suella Braverman. Does that change in the coming days?
Well, she's going to be speaking in the House of Commons later today in Home Office questions, so potentially you could get developments there. But it comes at a difficult time, not just because of this personal issue around Suella Braverman and the speeding ticket, but in a much broader context, because last week Suella Braverman was criticising the Conservatives' policies on migration, and this week we're set to get new data showing that you've had a record surge in migration into the UK in 2022. Now, this is a huge issue for the Conservative Party. They've long promised to cut migration, and of course Brexit was touted as giving Britain freedom to control its borders to reduce migration. But what you've actually seen is that while the numbers from the EU have fallen, the numbers from outside the EU have risen, because you've had this post-pandemic surge of students, refugees coming from Ukraine and Hong Kong. And it's especially difficult for Rishi Sunak when he wants to focus on illegal migrants. It's one of his top 5 pledges to stop the boats coming from across the Channel. But if you try to reduce immigration as a whole, it dents growth. And he's got business leaders crying out for visas for the jobs that Brits just don't want to do, truck driving and fruit picking. Suella Braverman says she wants to see Brits doing those jobs. But if he banishes her to the back benches, she could prove a real thorn in his side.
Lizzie, meanwhile, UK home prices, or home asking prices, also rose at the fastest pace in a year. What does it tell us about the state of the UK economy?
Well, you make the correct distinction. It is asking prices, not sale prices. This is the latest report from Rightmove. They've climbed at the fastest pace in a year, and it does suggest that actually there's this confidence in the housing market because of the resilience we've seen in the UK economy, and you've seen mortgage rates stabilising, especially compared to those 14-year highs in the aftermath of the Liz Truss mini-budget. However, you still have economists warning that there's going to be a house price correction in the UK, and you've still got markets expecting more rate rises from the Bank of England. So what will be interesting to see is whether these asking prices convert into sale prices.
Lizzie, thank you so much. Our UK correspondent there, Lizzie Burden. Now let's get straight to the Bloomberg Business Flash. Here's Alex Morgan. Hi, Alex.
Hello, Francine. Good morning. 2 law companies are planning to merge to create one of the world's largest legal firms with $3.4 billion in revenue. Well, the combination of Allen & Overy and Sherman & Sterling will have almost 4,000 lawyers across 29 countries and offer US law, English law, and local law capabilities. SpaceX has launched a 4-person crew towards the International Space Station. Its Falcon 9 rocket lifted off from Florida on Sunday evening. On board were 4 private astronauts, including the first woman from Saudi Arabia to travel to space. Well, the mission was operated by Axiom Space. It's the second of 4 human spaceflight launches that SpaceX is handling for that company. A committee appointed by India's top court says it doesn't see any regulatory failure or signs of price manipulation in the rise and fall of Adani Group stocks. With initial findings comes a relief for Adani's empire, which has lost over $100 billion since the Hindenburg controversy. Well, shares of Adani Group companies rallied Friday after the report was made public. That's global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Alex Morgan. This is Bloomberg. Francine.
Alex, thank you so much. Now turning to Wall Street, and the race is underway to replace James Gorman as Chief Executive Officer at Morgan Stanley after he revealed his plan to step down over the coming 12 months. Well, Bloomberg's Sue Keenan has more.
This is a trio of top execs at a top Wall Street bank, and so it will be widely watched who emerges as the one to succeed CEO James Gorman, who has expressed confidence about his succession plan, but did not announce any names when saying he would be stepping down. The key contenders are Ted Pick, who runs the Institutional Securities Group involved in trading and deal making, and he's also credited with revival of fixed income trading. Daniel Simkowitz, who oversees asset management with experience on both sides of the firm, and Andy Saperstein, whose operation manages money for the very wealthy, and that is a huge driver of growth. Now, Gorman took over at a time when the bank's business model was under fire, and it was struggling to recover from the financial crisis. In fact, he is seen as transforming the bank after it nearly collapsed, again taking over in 2010. Gorman now plans, as he said, to step down down as CEO within 12 months. He was previously at Merrill Lynch, and in his statement on Friday, he said, "It is the board and my expectations that the transition will occur at some point in the next 12 months. That is the current expectation," he said, "in the absence of a major change in the external environment." Of course, that references that there could be a lot of volatility ahead that perhaps hastens a change. We shall see. Now, the real face-off is between Saperstein, a lot of analysts say, whose wealth unit was a driver of growth at Morgan Stanley, and Pick, who runs the riskier deal-making. Although Pick has had one rather public misstep, his group was caught wrong-footed back in 2021 when Bill Hwang's Archegos capital management collapsed.
Bloomberg, Sue Keenan there on the race to replace Morgan Stanley Chief Executive Officer James Gorman. Now, we're getting some breaking news out of the Wall Street Journal saying that Meta, the parent company of Facebook, has been fined $1.3 billion by EU regulators for data transfers. Now, this is something that we were expecting, maybe not that amount, but certainly we're expecting Meta to be handed a record European Union privacy fine, which would eclipse the €750 million penalty that they had issued to Amazon.com. Now, the regulator, which oversees the EU operations of most of Silicon Valley firms, could also order the social network to stop all data transfers to the U.S. that rely on supposedly unsafe contractual clauses questioned by the bloc's top court. We don't know whether that is the case. Again, this is actually according to the Wall Street Journal. Meta has been fined some $1.3 billion by EU regulators. Of course, putting that into context, a data transfer ban has been widely expected, and that once prompted Meta to threaten a total withdrawal from the EU. So we're waiting also Meta, of course, response to this. Pre-market Meta platforms, of course, the parent company of Facebook and Instagram, down some 0.6%. The Irish decision we understand, but again, we're trying to really hit the phones to see whether we can also really fully quantify this. We understand that this decision could only target Facebook and not other platforms, and so it won't affect services as a whole, such as Instagram. We'll have plenty more, of course, on Meta. Coming up, also, the Greek bonds rallying this morning after the PM defeats the opposition. He's set to consolidate power only after a likely second-round election. We discuss that next, and this is Bloomberg.
Race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think that much better than when I was growing up. There's so many people who occupy areas I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress. And somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
Our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Doha, Qatar for our Qatar Economic Forum. Now, we're just getting some breaking news out of EU regulators. Meta, we understand, has been fined a record amount of $1.3 billion by EU regulators for data transfers to the US. Now, this is according to the Wall Street Journal. The Dow Jones also reported the similar amount. Again, the ban is something that we had been expecting, or certainly the data transfer ban has been widely expected, and that had once prompted Meta to threaten a total withdrawal from the EU. I guess the amount is maybe a little bit bigger than expected. This is really a long-running saga over protection of data in the US and the fact that they have been transferring, for example, some of the data collected here in the EU to the US. So the regulator is overseeing the EU operations of most Silicon Valley firms. We'll see how Meta responds to this and, of course, what the next step in the saga is. Now, Greek bonds rallying this morning after the Prime Minister, Kyriakos Mitsotakis, seemed to secure another term. That's after he defeated the opposition by a historic margin in the country's election. However, he fell short of the threshold to form a government straight away, meaning that he'll likely opt for another vote in a month's time. Let's get straight to Paul Togwell, our Athens Deputy Bureau Chief, with the very latest. So, Paul, how much of this was a surprise? That actually the margin, so he doesn't have enough to rule completely, but he did better than expected.
Indeed, we expected him to come first, Mitsotakis and his Centre-Right Union Democracy Party, which he did, and we expected him to fall short of a majority, which he did. But we did not expect that he would win by such a big margin, the biggest winning margin since 1974. And just for some context, Mitsotakis placed first in all but one of Greece's 59 electoral districts. What does that mean? Well, later today, Mitsotakis will get a mandate from the Greek president to try to form a coalition government. If he fails, it goes to former Premier Alexis Tsipras, leader of Syriza. If he fails, it goes to the third biggest party. But yesterday, Mitsotakis said the result was so good for him that obviously gives him a mandate to rule on his own. And he wanted this whole mandate process to go as quickly as possible, showing that he wants to go sooner than later to a second election. That election, of course, will take place under a different system that gives the first party a bonus of as many as 50 seats, making it much easier to secure a majority. Tsipras also yesterday, after the results came in, said that the electoral cycle is not over, indicating that he too wants to try to form a coalition, and that he knows that we're going to a second election as well.
So, Paul, when do we know what the next move from the Prime Minister is?
Well, as I said, he's going to see the president later today because it seems that this whole mandate process will go much more quickly than it usually does. Usually it takes as many as 9 days. We may have a date for a new election sometime this week, and the date that is seen possible is the 25th of June.
So how has the market reacted, Paul? Pretty positively?
Yeah, as you would expect, markets are showing the result. The yield on 10-year Greek government bonds is falling. Greek stocks are up. They surged as much as 6.7% in early trading. And also today, Moody's released a statement saying that the outcome of yesterday's election is credit positive. Why? Because it seems that optimism that Mitsotakis will be able to form a majority government after the second election means that we can expect the continuation of the fiscal and economic policies that he's been enacting, and that obviously is seen necessary to help Greece regain investment-grade status later this year, which obviously is important to help the country continue with its economic rebound, and of course to continue to pay down its high debt to GDP ratio.
All right, Paul, as always, thank you so much for joining us. Paul Togwell, our Athens Deputy Bureau Chief, of course, on the election in Greece over the weekend. Now, the Italian Prime Minister, Giorgia Meloni, has visited flood-hit areas of northern Italy after cutting short her trip to Japan for the G7 summit. At least 14 people have died in the natural disaster, and thousands have been evacuated. Now, the cost of the damage is estimated to be in the billions of euros. Let's go straight to Bloomberg's Alessandro Speciale, our Rome Bureau Chief. Alessandro, these floods have been a human tragedy. Economically, they're also damaging. So what's the expected impact?
It's still too early to assess exactly what's going to be the economic impact, but it's sure that it's going to be vast. Just this weekend, the sun started shining again. The flood-hit areas are starting to dry up, and it's possible to take stock Emilia-Romagna, the region that was hit as a high industrial, is a very industrialized area. Also, intestine farming, the crops have been damaged. An early assessment was 1.5 billion euros. And then, of course, there is the tourist season. Emilia-Romagna is on the Adriatic Sea, the Adriatic Riviera, and many of the areas there have also been hit. So the cabinet is going to meet tomorrow. There's going to be some tens of millions of euros of initial aid, but the cost of the reconstruction is likely going to be much higher.
Alessandro, Italy has avoided a Moody's downgrade. How much of a boost is this for Giorgia Meloni's government?
This is, in a way, a recognition of Giorgia Meloni's two things that Meloni has brought to Italy. On the one hand, it's an initial political stability, something Italy is not used to, but Meloni has a strong majority, has a relatively solid coalition behind her, and their approval ratings are still high, so you can expect more stability from this government than other governments in the past. And the other thing is that even if she is a right-wing populist, she has been displaying so far a remarkably conservative fiscal attitude. This means that financial markets have been taking a positive judgment of her. The spread between Italian and German debt is low and hasn't been rising so far. So even if Italy has problems spending billions of European aid, and this is the main test for Italy going forward, so far her economic stewardship has been recognized as positive.
Alessandro, thank you so much. Alessandro Speciale, there, our Rome bureau chief. Now, coming up, we'll have plenty more from this region. Saudi Arabia has shown it is willing to spend big sums to enhance its stature on the global stage. We'll take a closer look at how the kingdom is wielding its soft power. We'll also talk about energy and oil prices. This is Bloomberg.
I don't think we can replicate Tesla. Tesla is a unique because when they founded and then the personality behind it, the product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Doha, Qatar. Now, let's stay in the region. Saudi Arabia spending big to enhance its stature on the global stage. Now, it's not just splurging on sport, offering contracts worth hundreds of millions of dollars to tempt footballers like Ronaldo and Messi, but also art and music. But how far is the spending a plan to distract from the kingdom's human rights issue? Well, for more on all of this, let's bring in Bloomberg's Saudi Arabia reporter Sam Daher in Dubai. Sam, good morning. What's the motivation behind Saudi's big money plans?
Good morning, Francine. Great to be with you. I mean, it's actually a couple things. I mean, obviously, there's the wow factor. They want to be able to say, look, we can bring Messi and Ronaldo. I mean, on Friday, we saw them host Bashar al-Assad and Vladimir Zelensky. And obviously, they also want to change the narrative, change the conversation. They don't want people to keep talking about the murder of Jamal Khashoggi and Saudi Arabia's human rights record, you know, the jailing of people for simple tweets, and obviously the brutal war in Yemen. They want people to talk about other things. I mean, we just had on Sunday the first Saudi women go off to space. And the third and most important thing they want out of this soft power strategy is to actually convince, you know, Western visitors and investors that this is a welcoming place. This is not a threatening place. Come here, invest your money, and even live in Saudi Arabia. I mean, they want to double like the population of Riyadh to like 15 million, and they've said we want foreigners to come. So to convince people that this is a completely different place, and also a big part of it has domestic motivations. MBS, the Crown Prince, the de facto ruler of the country, wants to energize the youth and engage them in what he's doing, his Vision 2030. 70% of the population is under the age of 35. And also, he sees this sector as a very important engine of job creation. I mean, they want all of this leisure, entertainment, tourism to account for almost 10% of GDP.
Thank you so much. Our Saudi Arabia reporter there, Sam Daher, in Dubai. You can read more, of course, on his piece as he tries to figure out whether this is working or not. Now, a reminder of our special coverage this week from the Qatar Economic Forum. Among some of the key conversations we'll be having are the heads of state, including Bangladesh Prime Minister and Rwanda President. So we'll also have plenty more with business leaders. Steve Schwartzman joins us, and then an important conversation on energy with the Saudi and the Qatar oil ministers. Now, the Facebook owner Meta was hit by a record 1.2 billion euro European Union privacy fine. It's also been given a deadline to stop shipping users' data to the U.S. after regulators said it failed to protect personal information. So we'll have plenty more on that throughout the day. And this is Bloomberg.
Half of all American women in opposite-sex relationships now make the same or more than their husband. That's a record high. According to a new report by the Pew Research Center, a third of U.S. women are in egalitarian marriages, making roughly the same as their husbands, and another 15% of them are the breadwinners. Women with college degrees and no children, as well as Black women, are even more likely to make more or the same as their partners. But not everything is a bed of roses. Working wives still carry most of the weight of unpaid labor. Women in egalitarian marriages spend almost twice as much time taking care of the home or a loved one, while dedicating less time to leisure.
women are continuing to go out in the formal labor market and contribute and are still bearing all of the load of responsibility that disproportionately falls on them in terms of family care.
During the pandemic, in the wake of school shutdowns, the height of the childcare crisis pushed nearly half of American women out of the labor force, a trend that's yet to be reversed.
Women are just really struggling to meet the care needs of their family, and at the same time are really, really leaning into the labor market. And I don't think we've seen this before in history, to be honest.
The top names in business are on Bloomberg.
America and China have a lot of common interests: climate, nuclear proliferation, anti-terrorism, global stability, and we have differences. We're capitalists, they're not, and it's okay. We can sort that out, but we need to keep the Western alliances together, not just around war and Ukraine, but around strategic economic relationships, including trade.
Nobody covers business like Bloomberg, your global business authority. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions. This is Bloomberg Surveillance Early Edition with Anna Edwards and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Another round of talks. President Biden and House Speaker Kevin McCarthy are due to discuss the debt ceiling in Washington today as time grows short to avert a U.S. default. China bars firms from buying Micron chips, escalating the tech clash with Washington. But Biden says ties with Beijing are set to improve. To pause or not to pause, Christine Lagarde suggests the ECB isn't done hiking, while another voice at the Fed says he may back a pause. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta over in New York. And Kriti, still a focus on the debt ceiling. There were talks over the weekend, but nothing resolved just as yet. And time is getting shorter to get a deal that can get passed by lawmakers.
Debt ceiling, a little hot and cold there with a side of geopolitics, and again, hot and cold when it comes to China relations too. It's having an interesting effect when it comes to the U.S. stock market, at least in futures trading, kind of unchanged at the moment, but you do see a bit earlier in the session into U.S. futures, and that's really interesting because we're talking about, again, all of these issues, the debt ceiling, the geopolitics, especially over the weekend. How does then that make fund flows actually attracted to the United States? That seems to be the question, at least earlier in the session. But look, a lot of the sentiment here is also going to be impacted by what you are seeing overnight, and not only in Europe, but in Asia as well. And that's going to be crucial. A major rally on our hands when it comes to those Asian equities, perhaps that going to influence some of the equity action stateside as well. But for now, 42.05 on those futures contracts. The bond market getting a little bit interesting. That's where you see the defense for safety, or that safety defense, whatever you want to call it, really show up. The two-year yield, 422 is what we'll call it, down by 4 basis points already. It tells you as soon as you start to see a little bit more action on the U.S. front, that bid might get even stronger. So really keep an eye on it. As we see the yield come down on the front end of the curve, the dollar follows right now unchanged, but the direction of travel really tells you those interest rate differentials are seeming to drive the trade. And of course, NYMEX crude trading with a 71 handle. Not really much action there, but something we're going to keep an eye on as we watch for those bigger levels. Some breaking news, of course, hitting the Bloomberg terminal. Gautam Adani's flagship business jumping almost 19%, the highest level since February 2nd. You can see this massive, massive move. This, of course, coming off the headlines overnight that the India did not also really see that there was anything wrong. This coming after they investigated internally. One of the big kind of pieces of concerns, Anna, when it comes to the Adani Enterprises was just how close his relationship to Prime Minister Narendra Modi was, perhaps winning him some of those government contracts. For now, getting the all clear from India's regulatory authority, that pushing the shares to the highest since February, Anna.
Yeah, of course. This after we saw the stocks in that group really coming under pressure as a result of the short seller report that we've reported on previously. This is the picture then across European equity markets. Chrissy, there is a push and pull around the geopolitics and the debt ceiling story as well, firmly in focus over in Washington. So with that in mind, most of these markets not going very far. The DAX and the CAC just under the flat line, but the FTSE 100 is up by around 0.3%. So we're quite mixed actually across these European equity markets. What is not mixed is the Greek market down there. You can see that area of green, flashing bright green, just up by shy of 7% today, as we see a lot of enthusiasm for the news that the incumbent over in Greece has done pretty well. We'll see the bond market reaction on that in just a moment. But one sector that's not doing well is around basic resources. We've seen iron ore stocks iron ore prices under pressure, and that perhaps weighing on the basic resource prices. We had seen oil under pressure as well, but actually that just back towards the flat line on the Brent price at least. So we're down by 0.6% on basic resources. This is the Greek 10-year yield, and we're seeing substantial movement here, dropping by 15 basis points on the Greek 10-year yield. Actually, the gap between Greece and Germany decreasing, as you might expect, and Moody's talking about this as being credit positive. These developments in Greek politics, we'll get a further update because there are more votes to come, but the fact that the incumbent did pretty well does suggest that the market has given this the thumbs up. This is Ryanair's share price up by 2%. This is the low-cost airline. We'll play you more of our interview with the CFO over at this business. A positive outlook coming through from the company, that pleasing analyst it would seem. And NatWest Group up by 1.2% as it buys back a chunk of its own stock from the UK government. Remember, the UK government took a stake in what was RBS at the height of the financial crisis, 2008. It was the poster child for this part of the world for bailouts of banks. And since then, they've been trying to sell down that stake. It's now dropped today below 40%, but that effort is ongoing. Chrissy.
Anna, our top stories today taking us from Japan to China and, of course, Greece. We are going around the world in just the next few minutes. We begin in Japan, where the United States debt drama loomed over a meeting of G7 leaders. President Biden answered a question for our very own Anne-Marie Hordern about the debt ceiling talks.
First, we weren't making progress. Then we made a lot of progress. And then all of a sudden, they came back with a proposal that was very cut back from where they had agreed. We are willing to cut spending as well as raise revenue so people start paying their fair share.
Joining us now from Tokyo is Bloomberg's Anne-Marie Hordern. She has been all over Japan covering the G7 summit. Anne-Marie, give us the update here on the debt story. Of course, looming large not only on Washington, but I got to say the international audience as well.
Yes, certainly. This was something that the president's peers and other world leaders were concerned about. They're concerned about what could be the next potential economic risk to their own economies, and it's emanating from Washington, D.C. But we're going to get a lot more news today because there could really be this pivotal meeting that's happening today if, we look back at some point on the negotiations. And that's because Speaker McCarthy will be sitting down with President Biden. Really is just going to be these two men that have to come to an agreement. And what you heard from the president before he was wheels up on Air Force One, where he also spoke to Speaker McCarthy, and then when he landed, he said that he thought the meeting went well. McCarthy also thought it was productive, so that sets up potentially some progress in the negotiations today, is that they do not agree really on two things. One is where the spending starts from in order to cap. And also, President Biden, you just heard him there, he says he still wants to see revenue raises, AKA increasing taxes. Speaker McCarthy has said to me in a television interview right here on Bloomberg that that is something he would not agree to. He said two things he will not agree to. One is passing a clean debt ceiling bill, and the other is raising taxes. So while these two men are going to get in a room and potentially we could see progress, they are nowhere near done in terms of where the White House and the GOP see potentially a final agreement.
Yeah, and this gets tricky, doesn't it? Because it doesn't leave many days to get the deal done in the room and then to convince those outside the room, Anne-Marie, of its merits. Moving on to other matters at the G7, of course, this was something of a distraction from the G7 agenda, but there was plenty discussed when it comes to Ukraine. Further pledges of support for Ukraine from the G7.
So, of course, you have the G7 itself, those 7 countries pledging more support for Ukraine. Obviously, the president really is leaning into helping President Zelensky. They're now going to be starting to train pilots on F-16s, which down the road means we potentially will see F-16s on Ukrainian land. But we should note this G7 really showed that there's so much more work the G7 needs to do in terms of their engagement with the global south and trying to get the global south on side. So the real key leaders here that Zelensky met with, and more importantly, did not meet with, so he met with the leaders of India and Indonesia, but he did not meet with President Lula of Brazil. And even members of Lula's team said they thought potentially this was a trap. They were quite taken aback and surprised that Zelensky was here in person. And Lula even criticized President Biden and his rhetoric on Russia. So it's clear that there needs to be a lot more work from the White House and their allies in this engagement with the global south. Because not just is the global south important in terms of they need their support leaning in on how they view this crisis and not how, say, China views it and the China peace plan, but also the fact that this group really wants to start closing the loopholes on the Russian sanctions. And you have to do that with some of these emerging economies that trade with Russia. The issue is they haven't signed up for those sanctions. So I think this really showed where the work needs to be done for the White House and their allies.
Commodities certainly at the core of that story. Anne-Marie, you talk about the rhetoric coming out of Russia and China at the top of the agenda at the G7. Let's talk about the China side of the equation. Where's President Biden when it comes to U.S.-China relations?
So he was asked about this by another reporter and myself in the press briefing, and what he said is that very shortly we could potentially see some thawing of the relationship. He talked about the fact that what he called the silly spy balloon really was a deterrence and distraction of the work that he and Xi Jinping did in terms when they sat down at the G20 in Bali last year. So what we could potentially see is maybe some more meetings. And then I asked the president if he would be willing to ease some sanctions, particularly those that are on China's defense minister, because right now that individual is sanctioned by the U.S. government, and at the same time, the U.S. defense minister, defense secretary Lloyd Austin, is seeking a meeting with him, and is seeking a meeting with him next month in Singapore. And the president said that's under discussion. So I think there's potentially a lot more dialogue we could potentially see out of Washington and Beijing. But we have to see first if the White House may end up easing some of those sanctions.
Bloomberg's Anne-Marie Hordern, we thank you as always, covering all things Washington from quite literally around the world. We thank you as always. And just as President Biden is considering easing those kind of defense measures against China, Micron becomes the latest target in the United States-China chip war. Beijing warned operators of key infrastructure against buying the American chips due to, quote, relatively serious cybersecurity risks. Joining us for more is Rebecca Chung-Wilkins, Bloomberg Asia government and politics reporter. Rebecca, walk us through what we know about China's ban on Micron chips.
Absolutely, rather exquisite timing on Beijing's part, following all of those developments as Anne-Marie rounded up. I mean, we don't have that many details so far, but really this is the conclusion of a month-long review, a cybersecurity review by China's cyberspace authority, and again saying that there are national security risks when it comes to Micron's products. Now, China hasn't provided any details around specifically which products are going to be banned beyond giving that warning of these risks. But typically, of course, Micron uses its equipment in consumer technology, so not technology that's associated with sensitive areas like artificial intelligence. We're talking more about mobile phones, for example. So not necessarily things that are associated with those very sensitive areas, and really being read by most analysts a sort of geopolitical move and somewhat tit for tat after these very sweeping curves that we've seen from the US on China's own access to strategic technology.
Yeah, and of course we remember what has been said and done around Huawei, of course, by the West as well. Rebecca, where is this going to take the US-China relationship?
Well, I think ultimately what we are starting to see is China and the US learning to disagree together. So even though China is pushing ahead with some of these responses, as we can read them, and pushing ahead with these sort of bans after US and its allies moved to limit its access to tech, still, you know, the rhetoric has been somewhat more muted. And if we couple that with comments from Biden that we expect to see a thaw in relations, with the fact that we, for example, may see Blinken going ahead with that visit that was cancelled as a result of the balloon, we are seeing more broadly that these very top-level discussions may be resuming. And of course, there were these positive comments that we had from Jake Sullivan, National Security Advisor, when he met with China's top diplomat too. So there are sort of some room potentially to be optimistic, and perhaps this desire, both on the part of the US and China, to more narrowly define the areas in which they're going to focus their strategic efforts and reduce the risk that deteriorating ties lead to some kind of accidental conflict.
Rebecca, thanks very much. Rebecca Jung-Wilkins joining us there in Hong Kong. Now to Greece, where Prime Minister Kyriakos Mitsotakis defeated the opposition in the national election held over the weekend, moving a step closer to another 4-year term. Paul Tugwell, our Athens Deputy Bureau Chief, joins us now for more. And what happened here? Because I say the incumbent moves a step closer to another term, but it's not quite a done deal yet, Paul.
Exactly. Whilst we expected Prime Minister Kyriakos Mitsotakis and his centre-right New Democracy to come first, which he did, we didn't expect him to win an absolute majority, which he didn't. But the big surprise was how big a win he achieved. His percentage point lead over his nearest rival, former Premier Alexis Tsipras, was 20 percentage points. Mitsotakis' party placed first in all but one of Greece's 59 electoral districts. So the surprise was that his win was so big. Later today, Mitsotakis will get a mandate from the Greek president to try to form a coalition government. He has 3 days to do that. If he fails, it will go to Tsipras. If he fails, it goes to the leader of the third biggest party. Yesterday, after the results came in, and we all saw the surprise, Mitsotakis says that he has a clear mandate to rule on his own. So he wants this mandate process to go as quickly as possible so we can move to a second election as soon as possible. Even Tsipras said that the electoral process isn't over, so he's looking to a second election as well. What changes is that election will take place under a new electoral law that gives the first party a bonus of as many as 50 seats. And that would seen as helping Mitsotakis very much to secure a majority government after that election.
Paul, it's worth mentioning this has kind of been seen or interpreted by the markets as a positive reaction on top of Greece outperforming a lot of major European economies and economies around the world, not to mention their debt market becoming kind of a safe haven of sorts for a lot of credit investors under his leadership. What comes next here? What's the next move on the political front, and how are markets supposed to be thinking about that?
Well, markets have welcomed the result. The yield on Greek 10-year government bonds is falling. Stocks are rising. They surged as much as 6.7% in early trading. And basically, this is all around optimism that Mitsotakis, who is seen as a reformer, will be able, if he secures a majority, which is seen as highly likely in the second election, he will continue with the economic and fiscal policies that are seen as necessary for Greece to be able to regain investment grade later this year after 13 years. Those policies would, of course, enable institutional investors, for example, who currently don't invest in countries that don't have an investment grade, to come to Greece, and that would help to boost the current economic rebound, which would also help Greece to carry on paying down its high debt to GDP ratio.
Paul, thanks very much. Paul Tugwell, our Athens Deputy Bureau Chief, thank you for joining us. And we've already seen from Moody's that comment that this result is credit positive, so perhaps that takes us a little step closer to that investment grade Paul was describing there. On to other matters, corporate news flow. We talked in the last hour of programming about Meta and about how it had suffered a fine at European level, where Meta saying it will appeal the EU ruling, including what it calls an unnecessary fine. As a reminder, Facebook owner Meta was hit by a record 1.2 billion euros or $1.3 billion. This is an EU privacy fine, and given a deadline to stop shipping users' data to the United States after regulators said it failed to protect the personal information of European users from the prying eyes of American security services. So that's what this particular standoff is about. Meta says it will appeal. There is no immediate disruption, it says, to Facebook in Europe. So things at Facebook itself continue regardless. Now, coming up on the program, we'll get back to the markets. Henrietta Pacmont joins us, Senior Portfolio Manager and Head of Global Fixed Income at Allspring Global Investments. We can talk about what we're seeing perhaps in European politics, but also what we're seeing crucially in Washington and the debt ceiling debate. Lindsay Newman joins us, Head of Geopolitical Thought Leadership at S&P Global. Perhaps the debt ceiling debate catching her eye, but also that US-China narrative and relations between the two. We will talk about that next. This is Bloomberg.
So what's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes.
Or
yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Look, there's a lot of gloom and doom out there. You got the debt ceiling, about geopolitics, and of course the monetary policy trying to tackle inflation. All that should bode pretty negatively for sentiment, and it kind of is. This brings me to a chart for our radio audience. Stick with me. We're looking at the S&P 500 being most shorted since all the way back to 2007, before the global financial crisis. It really shows you kind of the, again, pessimism baked into the market. Is that going to change how people actually invest, though? Let's bring in a true expert. Simon White, Bloomberg macro strategist, joins us now. Simon, they're positioned short. Does that really hinder the S&P 500 as much as this chart suggests?
Well, as is so often the case in markets, things are not often what they first seem. So I think that chart is really an artifact of the change in regulations back in 2008, the Volcker rule. So Index R, basically banks used to create S&P futures and buy baskets of stocks against it. And after the Volcker rule, they couldn't do that. So they were commercials in the CFTC data you had there. And now hedge funds who are classed as speculators, which is, as you had in the chart there, are now doing this. So I think you have to take that data with, with a pinch of salt. So I think there is certainly, people are underweight equities for sure, but I don't think there's an actual big short. If you want to see it in a different way, if you look at basically hedge fund returns versus the S&P, they're very slightly positive. So I think hedge funds are getting long. They're slightly long, but they're not yet super long. And I don't see we're going to have this big short that's going to be covered necessarily.
Okay, so you're sceptical of the big short and the covering that would be required then on that front. And you see a bit more FOMO, about fear of missing out to the upside. But I suppose there's a lot of volatility and potholes, I think is the word you use, that could come our way.
Yeah, absolutely. So I think there's people that are underweight. I think there's definitely a bit of AI stuff going on that's fueling this. If you look at the top stocks in the S&P year to date, NVIDIA, Meta, Advanced Micro Solutions, semiconductor stuff, they're going to benefit from AI. It may be too premature, but still nonetheless, that's what's happening. And I think that rather than shorts, it's the same ultimate effect. People are underweight and they're going to be chasing a market higher.
Okay, Simon, thanks very much. Bloomberg Simon White with the latest on his thoughts on the markets. For more market analysis, check out the Markets Live blog, MLIV Go, the functions you use on the Bloomberg terminal. This is Bloomberg.
covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
The names that move markets are on Bloomberg.
The regional banks have been under some stress, but I think the banks that have failed have had some very unique characteristics. What I see is a banking system that overall is well capitalized, still has very solid earnings, but we're monitoring the situation very, very carefully.
Nobody covers business like Bloomberg, your global business authority.
As we start to get the larger game changer aircraft, and beyond that the MAX 10 aircraft, which have got 21% more seats, that may put some downward pressure on fares into the 2030s. But what I can tell you is that Ryanair will always have the lowest fare of any airline out there, because we've got the lowest cost base by some significant difference. It'll always be within people's price point to be able to get out and fly. But yeah, I mean, the days of the 999s are possibly behind us for some time.
That was Ryanair CFO speaking earlier to Bloomberg TV. The budget airline delivering an income beat with high demand and consumers willing to pay higher and higher prices. Yeah, really interesting to see that business on the back of EasyJet last week upgrading guidance. So certainly the aviation sector in good spirits as we approach the busy summer season. And many of those airlines that operate business class suggesting that leisure travellers are filling the front of the plane as well. When we come back, we'll talk about the markets. Henrietta Packman joins us, Senior Portfolio Manager and Head of Global Fixed Income at Allspring Global Investments. A lot to discuss as we monitor the debt ceiling conversations taking place in DC. This is Bloomberg.
Nurturing also can come from men, and it's one of the qualities, I guess, that you found in your mentors that also pushed you up. Do we need even more nurturing post-pandemic? Is the way that we talk with employees going to change?
I
think talent becomes the single biggest differentiator of a successful entity versus an unsuccessful entity. So you've got to do everything possible to hire, train, retain, put your arms around talent. I mean, you really got to focus on your talent. In the past, it's always been give them money, show them that they have an upward mobility and can make even more money, and that's the only reason people come to work. I think post-pandemic, we are seeing more and more people say, I have to worry about me as a person. I have to worry about my family. I want to worry about my well-being, my mental health. So we've got to start encompassing people as holistic humans as opposed to a tool of the trade, which means that we have to engage with them head, heart, and hands, not just head and hands. The heart has to be engaged. So we have to show more empathy, show that we care, that they're citizens of the community, they're members of the family, and all of those have to come into consideration as we help an executive or an employee be an employee and be a person of the community and the family. The stakes are higher.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Another round of talks. President Biden and House Speaker Kevin McCarthy are due to discuss the debt ceiling in Washington today as time grows short to avert a U.S. default. China bars firms from buying Micron chips, escalating the tech clash with Washington, but Biden says ties with Beijing are set to improve. To pause or not to pause, Christine Lagarde suggests the ECB isn't done hiking, while another voice over at the Federal Reserve says he may back a pause. I'm Kriti Gupta in New York with Anna Edwards in London. Anna, so much to digest here, but it really does feel like those debt ceiling talks are going to be the market drivers.
Yeah, absolutely dominating thinking, I'm sure, and a big vacuum, really, where the facts are and where the future is on that story. And so the market really needs to establish those facts, hear them from the people involved, and then see whatever deal is done passed by lawmakers before global investors are sort of relieved on that front. Then there's the geopolitics between the US and China, which provides mixed signals this morning. All of that adds up to not much movement on the Stocks Europe 600, up by 0.1%, kind of 50-50. The sectors moving higher and those moving lower. Geographically, we're pretty well dispersed as well. We have a mixed picture across the German and French markets, which have been under pressure for much of this morning. The Greek market doing really well on the back of that the Greek election, and we'll get to that bond market reaction then next, because we are seeing those yields falling. We're seeing the spread between the Greek yield and the German yield falling. The Greek yield was already below the 10-year Italian yield, and we see a continuation of that particular dynamic as this is a country that post this election moves towards another round of voting later this year, but is trying to claw back that investment grade, Chrissy, as we've talked about a number of times on this program. Basic resources is one sector that's under pressure today, down by 0.7%. That weighs a little bit on the London market, of course. And Ryanair is up by 1.9%. We heard just before the break a clip from the CFO talking about the era of very ultra-low fares being over, but those fares still, in his view, affordable to many. Interesting dynamics around the aviation sector. In terms of the numbers, they seem to have gone down well with investors. Chrissy?
Yeah, Anna, if you had told someone perhaps 10 years ago that Greek debt would be one of the best investments you could have, I imagine they would not believe you. That theme of safety certainly kind of flowing into the United States as well. Futures might pretty much unchanged following that tone you're seeing in Europe at the moment. The mixed feelings between some sort of progress on the debt ceilings. Meanwhile, you are seeing the geopolitical situation between the U.S. and China, and arguably Europe caught somewhere in the middle, escalate, and that really yields a net zero change when it comes to futures. 42.03 on that particular contract. The two-year yield starting to see a bid into the front end of the curve, 4.23 on that yield. Again, when we're talking about that bid for safety, treasuries, ironically, are still the choice in the face of a potential debt default by the United States. And with that bid, you do see the dollar index kind of taking that lead in terms of direction, but on the surface, not much direction. Again, being pulled by some of the other currencies in both directions around the world. NYMEX crude will stay with that similar theme, unchanged at the moment, but a 71 handle. The theme you need to know, Anna, is that all things are pointing lower. That means that there is a little bit of cautious optimism. Well, I would say caution altogether, but optimism when you're looking at the bond market baked in. And I think that's going to be a key theme as we go into the trading session.
Let's talk markets then. Henrietta Packmont joins us, Senior Portfolio Manager and Head of Global Fixed Income at Allspring Global Investments. Henrietta, very nice to see you this morning, this Monday in London. So cautious, we're still cautious. We thought perhaps we'd get something a little more concrete over the weekend in terms of a deal so that lawmakers have time to pass it. That's not the case. We're looking at tighter and tighter timescales. How do you navigate then bond markets around this?
Absolutely. I think we were expecting a little more than we had over the weekend, we saw the backup in yields towards the end of last week, and for me that was driven by a bit of optimism that the deal would get done. So I think the sort of wait and see mode that we're in this morning, not much going on the equity side or the bond side makes sense. We need to get a bit more colour from those negotiations.
And how do you play how do you play treasuries at this point? Because from what you were saying there, there's a sense that yields go higher if a deal gets done because of people coming out of the safe haven of bonds, but others argue the reverse could be true. So what is it that you're watching for in terms of the treasury market dynamics?
So we've seen probably more movement on the short end and certain maturities on the short end, really reflecting the negotiations on the debt ceiling. I think if you look at the longer end, yes, there's a debt ceiling negotiations, but there's also the growth prospects in the second half of this year that are coming into play, and we think that that is going to look a little more difficult as the year progresses. You've got a lot being thrown at the consumer. You've got a lot still the sort of fallout of what happened on the banking side that needs to play out a little bit in terms of credit conditions. And to be fair as well, if you look at the debt discussion, there may be a bit of fiscal tightening attached to it as well. So not all good for growth.
Henrietta, over the weekend, Geeta Gopinath over at the IMF wrote a paper about the fact that the markets are overestimating just how much progress has been made on the inflation front, specifically when it comes to whether or not central banks are actually done with hiking policy. Talk to us a little bit about just how long this inflation kind of trajectory could persist if we don't eventually hit the recession that I think the markets are pricing in by the end of the year. How much of a possibility is it that the inflation story, the inflation dynamic that we're in right now continues for the next year, year and a half?
Well, I think you have to remember sort of things take time to sort of filter through the system. In a way, inflation numbers took a while to get up over the course of last year, and now they are going to take a bit of time to come down. We have seen progress in certain areas. I'm thinking goods, I'm thinking food to an extent, but seeing more pressure on the services side, which particularly the Fed is looking to deal with at the moment. So. Yes, our stance is that central banks are probably going to need to see really some pretty strong deceleration in growth before they start cutting. Hence, the sort of cuts that are priced into the US curve at the end of this year are possibly a little optimistic. So we do think that it is going to drag on a little bit over the course of this year.
Henrietta, is there a way to play, bond volatility specifically? In the aftermath of the banking turmoil, it felt like bond volatility was the new norm. And then as we get closer to the unthinkable scenario of a U.S. debt default, it feels like bond volatility has kind of disappeared. Your thoughts?
I think what we're seeing now is that fixed income has got its place back into portfolios. You've got a bit of concern in terms of growth, which means that you might want to balance your equity allocation with some fixed income. We've come out of a period as well where some fixed income assets just weren't attractive given where they were. I'm thinking European assets, for instance. Now, if you look at investment grade on the European side, for instance, you're looking at over 4%. So I think that's what investors need to sort of take into account. There isn't necessarily going to be a perfect moment to add to the fixed income portfolio, but looking at it now, given the backup in yields that we have and the sort of concerns around growth, makes sense.
Let me ask you about where you see opportunities internationally, because with yields behaving the way they are, you've made the point in your notes that the US is no longer the only source of yield. Maybe if you're worried about the debt ceiling, you want to focus elsewhere where you might see less volatility. Where is appealing to you?
Absolutely. You go back a few years, the only source of yield was the US. Now that has changed. We are seeing even US investors starting to look outside of the US in search of yield. They can even look at it in hedged in currency terms and get a bit of a pickup. I'm thinking European assets, for instance. And you don't necessarily need to go too far down the credit spectrum to pick up some of that yield.
Right, so not to Greece?
Not necessarily to Greece, so it's obviously had a good morning,
and it's, not as far
it's
down
on the mend.
It's not as far down the credit spectrum as it was.
Exactly, and in theory it's on the way up. So yes, definitely European sovereigns. We're seeing a fair amount of interest in terms of European investment grade as well. Maybe a little more caution, or at least more of a wait and see attitude in sort of high yield, for instance.
Henrietta, thank you very much. Thanks for joining us. Henrietta Backnall of Allspring Global Investments. Coming up, we'll talk geopolitics. Lindsay Newman, head of geopolitical thought leadership at S&P Global, joins the team. This is Bloomberg.
Big ideas, we show the productivity increases that are possible because of artificial intelligence. It's these companies who could be some of the biggest beneficiaries if they harness AI correctly. I think a lot of people are looking for the killer app, like they look like these viral apps that the internet delivered. The killer app for artificial intelligence is productivity gains, and any company does not harness it is probably not going to be one of the big winners out there. And just one other thing on AI. The real winners here are going to be those companies that have proprietary data and have lots of it, have the best domain expertise, best AI expertise, the best pools of high quality data to basically create new businesses.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
We're not looking to decouple from China. We're looking to de-risk and diversify our relationship with China. That means taking steps to diversify our supply chains, and we're not dependent on any one country for necessary product. It means resisting economic coercion together and countering harmful practices that hurt our workers. It means protecting a narrow set of advanced technologies critical for our national security. Those elements are all agreed on by the G7.
That was President Biden speaking about US-China relations at the end of the G7 summit in Japan. Joining us now to discuss is Lindsay Newman, head of geopolitical thought leadership at S&P Global Market Intelligence. Lindsay, nice to have you with us this morning. So if you just think about how the G7 has responded around China, it seems clear that they were very much focused on Russia, and that's where a lot of the conversation and Zelensky's presence led them in that direction, of course. But on China, I mean, it almost sounded slightly more European than American, the G7 community communique at the end, talking about how they wanted stable China ties. And as he said there, as we heard President Biden saying, not decoupling, but de-risking and diversifying. What did you make of the comments on China from the G7?
It's very clear. This was an incredibly busy weekend. The message was unity across the board for this group of 7. And there were communiques on a variety of topics. One of the new words, the new phrases that has entered the lexicon from this weekend, we saw just there from President Biden, is economic coercion. And they announced this launch of the coordination platform on economic coercion. We will see where that goes and what the focus is there. It's about economic security, economic resilience. It's about all countries. It did not, interestingly enough, that communique did not mention one country or the other. It was about combating and addressing economic vulnerabilities, whether it arises out of the pandemic, the lessons learned from Russia-Ukraine, the ongoing Russia-Ukraine conflict.
Okay, so that was certainly part of things. Since then, and also as that was all unfolding in China, we've seen interesting dynamics between, in Japan, we've seen interesting dynamics between China and the United States. So on the one hand, we hear from President Biden saying a better relationship is coming. At that press conference, he was sort of suggesting that things would be thawing a little bit. And then you see China saying that they find that Micron is not a business they want their companies to do business with because of cyber concerns. I mean, how do you look at the China-US relationship then with those sort of competing crosswinds?
Absolutely, pragmatism. Pragmatism is the way that we can be thinking about the U.S.-China relationship, and it was all over the G7 summit this weekend, which is to say they were very clear, the group of 7, that countries are going to act in their national interests while they're also cooperating across these mutual spheres around energy security, around infrastructure, around economic coercion, and supply chains. The Japanese cabinet minister for public affairs said it best. He said, we live in an era in which we find ourselves, in which cooperation and division are inextricably intertwined. And that's the relationship that we see across the board in this geopolitical moment.
Well, Lindsay, the Micron story that Anna references is so interesting because just a couple of days ago, Japan offered $1.5 billion for Micron chips. Just days later, China saying this ban is going to be the future of that relationship. In the absence of this kind of only China economic investment, or in the fallout of the diversification from the United States, what countries stand to benefit?
What this is all reflective of is we're seeing this interconnection between, this accelerating interconnection between the economic and security spheres, that countries across the board, the US, Europe, are pursuing economic levers, economic tools like tariffs, like sanctions, like entity lists, restrictions, license requirements, in order to pursue their national security, to pursue their national interests. So we're seeing this conversation around nearshoring and reshoring and ally shoring. So there are certain countries that are going to see the benefit of diversification, even as these relationships continue to evolve.
Can I ask you about, Lindsay, how do we interpret then, you've referenced this a little, but maybe you can explain it to me a little more. How do we interpret reference to economic coercion then at a time when, as you say, lots of countries express their foreign policy interests through economic policy, through sanctions and the like? So what does it mean when they talk about not wanting other parts of the world to use economic coercion at the same time as sanctioning those they don't agree with? Help me understand what economic coercion really means.
Well, as I said, it's a phrase that we're all getting up to speed on. It's something that's really entered the lexicon over the weekend, alongside de-risking, alongside circumvention. These are some phrases that we're going to be unpacking in the coming weeks, how monumental this G7 summit really was. But they have laid out that there's going to be this coordinated platform, as we saw last year with this partnership on global infrastructure. Now we're seeing this coordinated platform for the G7, really saying we're going to put a marker down, that we're going to be unified and we're going to look to address these shared challenges and bring in the global south. And we saw that with the invitations this weekend at the G7 summit.
Lindsay, we're going into the 2024 presidential cycle. How did the geopolitics of the next year and a half, if you will, kind of bleed into the international story there?
One of the topics that we have to be looking at has to be this ongoing support for Ukraine. The message of the G7 was very clear. The G7, the group of 7, Europe, the US, will be there for Ukraine as long as it takes. We saw this decision that started the weekend where the US administration has had this rethink on the F-16 training. The intention here is really to put Ukraine in a position, as this counteroffensive begins to take place over the next couple of weeks, to see Ukraine make certain gains in order to ideally find this just peace that we saw the G7 talking about. But we see back in the US that there is plenty of conversation around ongoing support for Ukraine. What will that look like if we see changes in the 2024 election? The Russia-Ukraine war is certainly one lens through which we can understand the geopolitical developments and the US election cycle.
Okay, thanks very much, Lindsay. Thanks for joining us. Lindsay Newman of S&P Global Market Intelligence. Coming up, we'll talk about the banking sector. JP Morgan is set to host its first annual Investor Day since the banking turmoil. More on what is ahead for that bank next. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot. You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Focus on the technology, and in particular, the financial technology opportunities, because they're going to change the landscape in financial services over the next few years.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta in New York. Now let's take a look at some of the events that lie ahead for us this week. Later today, we'll be hearing from the St. Louis Fed President, Jim Bullard. Tomorrow, we get a slew of global PMI data. On Wednesday is the UK CPI print that will matter. We'll also get minutes from the Fed May meeting. On Thursday, US GDP and jobless claims will give more insight into the US economy. On Friday, April's PCE print is in focus, as well as durable goods data out of the United States. So, Kriti, plenty of data points to look ahead to this week.
Plenty on the macro front, plenty on the micro front too. Anna, some of the pre-market stories that we are watching this morning, well, they start off with one stock in particular, Meta, in the tech space. META is the ticker for our radio audience. Find a record $1.3 billion in the EU over U.S. data transfers. Shares are down about 1.2% in the pre-market. Let's put that into some context if we can. Equal to about 2.6 weeks worth of European revenue or 4 days of global sales. So certainly not an insignificant amount, certainly more than it was previously expected, which is why you are seeing the shares under some pressure. Another stock tilting to the downside, Micron, tumbling as China says chips are a security risk. Remember, just last week, they got $1.5 billion from Japan. So now starting to see a question of where that future investment is coming from, if not China. So something we're going to be keeping an eye on there. Shares down about 6% in the pre-market, trading at about 64.25. And lastly, we stick with the China story. Alibaba, those shares actually higher by about 1.7% when you're looking at the ADRs in the pre-market. The reorganization credit, well, that's neutral for now. That according to the S&P. Some good news after Alibaba has, of course, been in some hot water, Anna, throughout, well, I want to say the last year and a half or so, as it talks about its reorganization, just how much control it's going to have over the Chinese consumer. Another story we're watching in the U.S. specifically is JP Morgan, as it hosts its Investor Day today, just after it purchased First Republic. Joining us now is Bloomberg's global finance correspondent, Sonali Basak. Sonali, before we get into the First Republic story, let's talk about the China story, because that seems to be dominating headlines. JP Morgan himself, Jamie Dimon of JP Morgan himself said that, look, they're starting to do business a little bit more and more. What's the take on China on Wall Street?
I think you have to differentiate some of the concerns about China with the larger geopolitical question when it comes to all global investors. Remember, JP Morgan and many U.S. banks, Citigroup, Goldman Sachs, have a significant presence in China. And you think back to last year when they were in Washington, the big consumer bank CEOs, and they were questioned about their presence in China and what they would do in the event of a Chinese invasion of Taiwan. Now, that was the most contentious I've seen, kind of that kind of an interaction. And what the executives said one by one is they would follow the rule of the U.S. government. But again, they have large businesses in China, and there's no plan really to step back in any meaningful way if you already have a business at scale.
Okay, so that's the China momentum, or maybe change in direction for some who are playing in that space, Sonali. Let me ask you about things a little closer to home, though, and that's consolidation in the banking sector, because JP Morgan has clearly played its part here, but there'll be many questions about whether there's more of that to come.
Yeah, certainly. And if you think about it, the bankers are certainly, gearing up their notebooks and pencils and thinking about how they would get this done, talking to different banks. But if you look at it, JP Morgan's big investor day is today, and the spotlight will really be on two women, Marianne Lake and Jennifer Pipsack. These are two women who are very clearly in the line of succession and tasked with integrating First Republic. Now, this is a monster deal for a bank that is already the largest bank in America, and so making this deal work out for them will certainly be a capstone of their careers. There's certainly that deal alone that we'll be looking to today, as well as JP Morgan's acquisition ambitions beyond that. They're known to make a lot of tack-on acquisitions, Anna, and invest in a lot of innovative areas. But remember, one of them more recently has not worked out very well with the college planning site, Frank, which ended up in a lawsuit, and the SEC charging the founder of Frank with defrauding JP Morgan.
In our last minute or so here, as we're talking about acquisitions and expenses, talk to us about just what we might learn on the kind of guidance front.
Yeah, the expense front is probably one of the most important. As we know, they have this massive acquisition. So what does it mean in terms of, do they have to cut other places? We've seen Morgan Stanley step up and do another round of job cuts, for example. We know JP Morgan is going to play up the areas that they may want to grow in, that they may not be number one in. But what does that mean in terms of places that they're in a soft market in right now? Will they have to finally take the axe to certain parts of the business?
Sonali, thank you very much. Being both Sonali Basak with the latest there on JP Morgan. Of course, details around succession at Morgan Stanley very much dominating the end of last week. So no doubt on Wall Street, that'll get plenty of conversation as well. And Sonali continues to be across that story for us, of course. So we'll be focused on JP Morgan and that Investor Day taking place today. Lots of data to look ahead to throughout the week, of course, whether that's the global growth story with all that PMI data hitting tomorrow, inflation data out of the UK, minutes from the Fed, all of that hitting this week. Lots to talk about. As well as, of course, monitoring the latest from DC on the debt conversations. That is it for Early Edition. Surveillance is up ahead. This is Bloomberg.
successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. You know, we started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is, like, you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And, like, frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct-to-consumer. Like, I want to build out a true consumer-empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Recession that everybody's been waiting for isn't coming, hasn't come.
We are investing into a slowing economy.
Consumers kind of moving towards the front end, institutional going towards the long end.
We think the Fed is going to keep rates higher for longer.
The risks are that they don't even cut this year, they start to cut next year.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
You be Jim Nance, I'll be Nick Faldo. 15th hole.
Oak Hill, we are here with Michael Block.
151 yards out. He's reaching for a 7-iron here, Jim. Look at that. TK, what a shot.
Outstanding.
Beautiful.
Let's listen to the crowd at Oak Hill.
Brilliant,
it was spectacular.
Thanks for getting involved.
It was for me, John. It was. You know, for those of you international that are going, where did they wake up today? This is Golf in America over the weekend, and it was a club that I have the fondest memories of caddying there.
What a story, Michael Block.
It just kept getting better and better.
That's just awesome. I don't think I've ever seen a hole-in-one like that, TK.
No,
You're straight into the cup.
Never seen it.
Straight into the cup. I'm told that the club pro from California was charging $150 an hour for lessons, and he picked up $288,000 over the weekend.
And in this age of media, you know, what we try to do here every day is try to be understated about the markets. I just thought the way CBS did it understated for, you know, the rain on Saturday. You know, it goes back to Rochester. There's July and winter, and that's it.
Just awesome. Just awesome. We won't be doing that again, don't worry. From New York City this morning, good morning.
It worked.
Good morning. We'll practice next time. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. Equity futures on the S&P slightly negative. The back and forth on the debt ceiling debate, debt ceiling talks on, off, not so good, okay, doing all right. TK, we get another round of it a little bit later today.
Our president leaving on a jet plane. He's coming back home. Airman Horton is in Tokyo and will brief us on a returning Biden to Washington. What I would focus on, John, is I believe futures right now are 4201.75 on SPX. There's lots of distractions this morning away from a market on a tear.
Let's get some quotes for you from Kevin McCarthy, the Speaker of the House, speaking of Fox over the weekend. It seems as though he wants default more than he wants a deal, talking about the president snapping back, Bramo, and ultimately saying it's time for the other side to move from their extreme positions. Much of what they've already proposed is simply, quite frankly, unacceptable. That was the weekend.
I have some bad news for everyone. We're going to be doing this all week long because basically it's not going to get better until it gets worse. And that's basically what everyone's been saying. And it seems like that's being borne out because right now, the fact that we heard some rhetoric, we heard a walkout from the GOP over the weekend, McCarthy coming out with some pretty fiery rhetoric. And then all of a sudden they're meeting again today and constructive tones, moving forward, President Biden signaling the all clear.
I like what Vallier said in his morning note, Greg Vallier, AGF. He said it was a bad, inconclusive weekend. And John, the question is on a Monday morning, What's the countdown to when they run out of money? I'm unclear on this.
Treasury Secretary Janet Yellen says the clock is ticking. The countdown starts now, and
it's ticking, absolutely.
She doubts whether we can get to the middle of June. At the same time, though, yields are higher. The equity market's breaking out. Is this a true and real breakout? Two pieces of pushback this morning already. One from Mislav Matejka at JP Morgan, TK. Another from Mike Wilson of Morgan Stanley. You might say the usual suspects, but ultimately there is some pushback out there.
This is the debate that's out there. We're going to bring it to you all week, folks, and looking forward to that. I would say one thing globally, which folds into Mike Wilson's caution, is the first chart I looked at today was London copper. And I'm sorry, it is south, and the Bloomberg Commodity Index, BCOM, is south. It's down 26% from the middle of last year peak.
Copper does not validate any cyclical enthusiasm about the global economy right now. It's been making new lows for the year over the last couple of weeks. Let's whip through the price action for you on the equity market on the S&P 500. Slightly negative, getting your week started on the S&P. Just a bit softer. Yields a little bit lower. Before today, though, 6 consecutive days of yields climbing higher, both on a 2-year, Lisa, on a 10-year too. Your 10-year right now, 365.74.
Although we did hear from Fed Chair Jay Powell on Friday some indication that he might be ready for a pause and similar rhetoric out of Neil Kashkari in the Wall Street Journal. Today, President Biden and House Speaker Kevin McCarthy are resuming talks. Perhaps we'll get more tea leaves that will then be reversed by tomorrow. On Wednesday, we get NVIDIA reporting earnings after the bell. This, to me, may be one of the key moments of the week because of all the artificial intelligence kind of hype that we've been seeing. NVIDIA shares year to date are up about 113%. So a huge part of the gain. Also interesting in light of the Micron news with China over the weekend. We'll get to that. But basically, China banning imports from Micron, saying it didn't pass the sniff test when it came to national security. And this week on the data front, we have global flash PMIs tomorrow, FOMC meeting minutes on Wednesday. And this, to me, is key. On Friday, we get PCE inflation and UMich survey, basically the forward-looking projections for inflation. The PCE is not expected to go down at all. How do we deal with this idea of core PCE that is sticky around 4.6%? How does the Fed deal with that?
It's going to be a big question for the Federal Reserve. More Fed speak through the week. Can hardly wait for that. So many Fed speakers. Interesting interview with Neil Kashkari of the Minneapolis Fed as well with the Wall Street Journal over the weekend. We'll pick up on some of those comments in a moment. Joining us now to start the week, good friend of this program, good friend of ours, Luke Cower, asset allocation strategist at UBS Asset Management. Luke, good morning to you, buddy. As always, let's start here. Are we on the brink of a breakout? What are you and the team saying over at UBS?
So right now, this kind of, I would say, connects to what Ms. Abramovich was saying about the debt ceiling agreement or lack thereof. It's that, with equities and about near the top of a 7-month range, it's really difficult to see that now, before this being solved, being the proper time for a real, true, genuine breakout. And with this agreement. And it was alluded to effectively in the intro. If this is a real battle, if this is a real war between the two sides, you got to come out of it with some blood and scars. And from what we saw early last week, talks were almost going too well heading into Friday. So kind of not a surprise to us to see that backpedal and for us to really test the urgency of both sides as we approach an unknown X date and an unknown, true X date thereafter.
Look, you've got the advantage of a terrific research combine, and I'd love to know the ambiguity and which way you tilt. And if inflation is sticky, I think that means nominal GDP is sticky and revenues are better than good at corporations. Or if inflation is sticky, do we slow down? Which way does UBS tilt?
Well, so far, I think the jury would suggest more the latter, right? That a certain amount of pricing power has accrued to corporates, and that's the part of inflation that will be, relatively sticky, along with, maybe wage growth a little above the kind of previous cycle's trend. I think the kind of idea that profit margins have stabilized at a high level with inflation stabilizing kind of at a high level would support this. But I do think that right now we do have to have a lot of humility about what that last mile of inflation down looks like, because most likely, in our view, it will be driven by an economic contraction at some point in the future, certainly not in our base case for 2023, but it's highly likely that if we get to kind of a steady state run rate for inflation without the labor market cracking, that's still going to be a rate that's, above the 2% target right now.
Once upon a time, big tech used to be interest rate sensitive, and a lot of people have come out and said this time is different. And actually now they've somehow divorced themselves from the interest rate cycle, that even if rates don't go down, they will still do well. Do you buy into the whole artificial intelligence hype? Do you think it's perhaps a bit overplayed? How much are you really looking to the earnings this week to give you a sense on that?
One thing that, we think about AI, obviously very, very exciting technology, something that, we can use in our day-to-day, something that, you can see some modest efficiency improvements in how you operate now, no matter what kind of business you are. It's very unclear the extent to which that is going to drive, another huge leg of outsized profit growth for these players in the kind of tactical investment horizon. Is it something, that has certainly helped boost multiples? Yes. Are multiples, on the elevated range relative to the rest of the market? Yes, even more so. So from that perspective, unless you were, getting in a lot earlier based on the AI thesis, it doesn't seem to us that, now is really the time to be leaping on into some of those names that have really benefited the most, and some of those sectors that have really benefited the most from this recent trend.
So if you're constructive, where's leadership going to come from in light of the debt ceiling, in light of U.S.-China tensions, and in light of the fact that it can't necessarily come that much more under your thesis from artificial intelligence-related tech stocks?
Well, certainly at the headline level for equity is not that constructive. What we do think is that the stronger nominal growth environment is something that is going to underpin earnings for a time, but with equities quite expensive at the headline level, our view has been that if things are going nowhere in stocks for 7 months, what you could have been doing is clipping coupons in credit, and that's something where you're getting paid to wait. In the stock market, you really haven't been getting paid to wait unless you get a pretty decent margin of safety and are getting in at the bottom of the range. So that's still more our view that the implied yield, implied carry you're getting in equities isn't nearly good enough to kind of compensate for the implied yield you're getting in credit right now.
Look, we got to run here. We got some breaking news, but Mark Halfley from London emails in and he says, we're looking at the next Maple Leafs, Toronto Maple Leafs general manager, and there's Pridham, there's Gilman, or there's Kawa. How valuable are you if the Leafs need you?
I would say I'm certainly not an upgrade on Kyle Dubas, so I'm part of the long list that wouldn't be an upgrade. So from that perspective, I'm available.
Luke, thanks so much. John,
one of the best.
This is so important. They beat Tampa Bay, which no one expected. The Leafs crushed the reigning champions, and then boom, Florida. Goodbye.
You've got to explain to everybody, Tom, how Tampa has a good ice hockey team. I mean,
trying
to translate that to people outside the US.
Thinking to myself, this just does not make any sense.
No sense.
Jeffrey Vinnick was at Fidelity, and he was really, really good. And one day, Jeffrey Vinnick left off a zero coupon bond ballet, and he really, he bounced around. He did this as a hitter, and then all of a sudden, he built a hockey team in Tampa.
Amazing.
And that's what you do when you're a boy from Boston. You go down to Tampa and build it out, and he did it.
For better weather.
Yeah.
Luke Cower, thank you, sir, of UBS Asset Management. As we're having this conversation about maybe breaking out in the equity market, the challenges, the headwinds to growth, the debt ceiling debate, JP Morgan's upgrading its outlook, Bramo, in their investor day, upgrading the outlook.
To me, this is going to be one of the big questions. How do they upgrade the outlook? Capture greater profitability as they dominate the industry to such a degree that a lot of people are wondering how much more can they acquire, in light of Janet Yellen on Friday saying that there may have to be more roll-ups within the banking sector. I mean, again, at what point does their size and dominance and success become a liability now that they have 13% of all deposits in this country?
And this is JP Morgan this morning. We're upgrading our outlook.
Yeah, exactly.
Upgrading our
That's
outlook.
exactly
Just
it.
sort of hiding behind one hand.
They're profits. I think we've been very good about this in the earnings derby when it comes out. Most of these banks, including, as I say, the fifth bank of the United States, JP Morgan and Bank of America combined, they're hiding how much money they're making. That's a fact.
Upgrading our outlook this morning.
Yes,
golf voice.
Don't
coming across the green and upgrading their outlook.
It's got about 150 yards out.
Chase had terrific branding. Michael Block walking up the 15th, and in the background, for free on the white tent, it says Chase or whatever.
I mean,
the whole
it's what you pay for.
Great.
It's what you pay for. Equities right now unchanged on the S&P in the next hour. Sharon Bell of Goldman Sachs.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. Ukraine reported damage to dozens of buildings and vehicles in the southern city of Dnipro after another barrage of Russian missiles overnight. Ukrainian forces say they managed to shoot down 4 of the 16 missiles launched, as well as 20 drones. President Volodymyr Zelensky is expected to return to Kyiv after attending the Group of 7 summit in Japan, where he suggested Russian forces are losing control of the eastern city of Bakhmut after months of fighting. UK Prime Minister Rishi Sunak is arriving back from the Group of 7 summit, facing yet another cabinet scandal and Conservative Party finger-pointing over soaring migration numbers. At the center of both issues is Home Secretary Suella Braverman, an advocate of cutting back immigration, who has come under fire for a possible violation of ministerial rules relating to her handling of the speeding ticket last year. President Biden and Republican House Speaker Kevin McCarthy are set to meet today for talks on averting a catastrophic U.S. default. As time runs short and key differences remain, negotiations have been whipsawed between progress and deadlock for days as the two sides simultaneously grapple for political advantage and a deal. Handpicked negotiators met Sunday evening at the U.S. Capitol. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
City, from London, in Sydney, from Washington, in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
The moment news breaks, no one covers the world like Bloomberg.
A lot of the focus and the momentum here is what to do with inflation. But again, this is still a monetary policy story.
The first round results with President Recep Tayyip Erdogan showing resilience and strength on his nationalist platform.
A number of leaders have come out on both sides of the aisle and say we will not default. That does seem like they are making progress.
Bloomberg, your global business authority.
You just said, I'm willing to cut spending. Speaker McCarthy says that the U.S. government needs to spend less next year than they did this year. So will you agree to that?
We have agreed to cut spending. We've cut spending, and we're going to continue to cut spending. But the question is, what base do you start from? You just calculate what it means if you take all discretionary spending and you make no distinctions other than what the percentage number of the cut is. And some of it makes absolutely no sense at all. And so what we've done is we're going to have to sit down. I'm hoping that Speaker McCarthy is just waiting to negotiate with me.
Those negotiations pick up today. That was a brilliant exchange between the President of the United States and Bloomberg's Anne-Marie from New York City this morning. Good morning. We'll touch base with AMH in Japan in just a moment. Want to touch base with the market just briefly. Equity futures unchanged on the S&P 500, going nowhere after the biggest one-week gain on the S&P going back to March. The Nasdaq 100 last week up almost 3.5%, even with yields higher every single day last week on both a 2-year and a 10-year. A 10-year this morning, yield lower by a single basis point, 365.93. And we wake up again to another morning anticipating, looking ahead to more talks on Capitol Hill. There are a range of estimates out there. Here's one from Goldman and the team, estimating that Treasury will drop below $30 billion in cash as soon as June 8th, but warning the following. The estimate is subject to substantial uncertainty, so there is certainly a chance the receipts could slow more than expected and leave the Treasury short of cash by June 1st or June 2nd. TK, we're taking this early June date, I think, increasingly seriously.
Absolutely. To me, that was the front line this weekend, and this is Yellen out front, and maybe it is the acuity of being an economist, where she put a bow on it earlier, and the bow's moving, and it's moving quickly towards June. The other thing that's moving, I would point, is the calendar. We were talking about this on May 10th. It's not May 10th. It's May 22nd.
No, we're running out of time, aren't we?
We're running out of time.
I think it's less about the mood of the moment, the mood music, so to speak, and much more about substance now. Let's get into the substance of it. What's the hang-up?
I would say, I would go with that. And the substance, of course, is the return of the president to Washington. In Tokyo is our Anne-Marie Horton, our Bloomberg Washington correspondent. Anne-Marie, there's points in a campaign where there's hallmarks along the way, not in the news flow, but maybe a research piece that's out there or an op-ed piece. This morning, the Washington Post drops a bombshell of an op-ed piece directly addressing the president's age. He returns to Washington for a debt debate, but he also returns to Washington looking at an 82nd birthday, etc., on election day. How's he going to deal with that when you get back there and keep asking him tough questions?
Well, I think that's exactly what the president needs to be doing. For the public to rest aside these concerns, he's going to have to get in front of the public, take questions from the press, like he did yesterday at the end of the G7 summit, and that potentially can assuage voters' concerns about his age. But Tom, I don't really think this is a bombshell. I think everyone has been talking about this,
yes.
Whether or not the whispers are getting now louder echoes. But everyone has been talking about this because it shows up in polls. Americans are concerned about his age. But also in the same age bracket, I would say, is the nominee right now that's leading the Republican candidate for president, and that's the former President Donald Trump. He's just 4 years behind Biden. So regardless, we're going to have a president, if it was to be a rematch of these two individuals, a president ending that next term in their 80s.
Yeah, and John, that was clearly addressed by the Washington Post in the op-ed piece. It was not just about President Biden.
You wake up this morning, you just get the feeling G7, what G7? Anne-Marie, what did they talk about? Because the president had to leave at dinner early. Even on the way back, reportedly on Air Force One, had to take a call with Speaker McCarthy. He's going to land, engage in talks almost immediately. Did he ever really leave behind the domestic issues?
I think it's fair to say he had 1 foot here in Japan and 1 foot back home in Washington. He even brought Bruce Reed with him to make sure that there was an individual on the team keeping in touch with his key negotiating team in Washington. As you said, he left a dinner early to have a phone call with his team. He was constantly kept up to date on where the negotiations were, but the negotiations over the weekend were very much so on and off. Breaking that impasse last night was this phone call the president had while he was on Air Force One with Speaker McCarthy. Speaker McCarthy then came out and said it was productive. He also, really for one of the first times it's been since the president's been abroad, did not criticize his trip abroad and just said we're going to meet tomorrow. So that's today. President Biden and Speaker McCarthy, these two men in a room. And this is how a deal is going to be able to get over the finish line, because it's really just these two individuals being able to come to an agreement. Biden alluded to that in the press conference, saying, I guess he wants me to get home to be able to hammer out this negotiation. So that's where all eyes are. And I think, you know, there's other topics, obviously, at the G7. China was a massive focus. President Zelensky was here in person. Russia was a massive focus. But for other world leaders and their concerns about future economic risks, when the President of the United States is in the room, that question would be going to him. Sir, are you going to have a default on treasuries, which is the bedrock and it underpins our entire global financial system? So it loomed large over him.
And Maria, I guess there's another way to reframe this and build on what John's talking about. Was this G7 a waste of time with the focus entirely on whether the U.S. would get its ducks in a row back at home? Or were there some really substantive things that took place, in particular having to do with China, with a communique that the Financial Times described as the strongest condemnation of China yet, and really a tit for tat with China and Micron over the weekend that really left me highly confused about whether we're thawing or exacerbating the tensions?
I think this week was a key week when we will look back in history in terms of a more multipolar world. Not only do you have Zelensky here at the G7, formerly this was a G8, where President Putin used to think of this club he was part of in a very prestigious way. Zelensky was here, some 600 miles away from Russia's Far East. At the same time, you had Zelensky in the Middle East. Clearly for Putin, he's seeing that the Middle East is no longer in his bag. And then you also had China's Xi Jinping last week sitting down with 5 ex-Soviet states. So you can see there are changing movements in the geopolitical world. And when it comes to some substance that happened here on the foreign policy front, it was all about China. And the president reiterated that yesterday in his press conference. What this administration and the Europeans have really been able to coalesce around is language about not decoupling, but de-risking. And I asked the president's Deputy National Security Advisor for Economic Affairs, Mike Pyle, what's the difference? And he said, look, de-risking means we don't want China to get a hold of advanced technology for their military. We have concerns about economic coercion and their market practices. But how can you call something a decouple when U.S.-China trade was at a record last year? So that is the framework that we are going into. But Lisa, you also bring up a great point. Just hours after we got this communique, China came out and said that Micron did not pass their cybersecurity review. And one thing Rahm Emanuel, the U.S. ambassador to Japan, said to me was, we're no longer really just seeing China take these economic coercions against nations. They're now going against companies. So I think this was really a pivotal moment, really, in the geopolitical landscape this week, even though domestic concerns were definitely front and center.
MH, brilliant coverage over the week, over the weekend, and this morning as well. Anne-Marie, thank you. Out of Japan, following the G7, the president, in an exchange with Anne-Marie in the news conference, talking about things improving with US-China relationships very shortly, and then Bramo, then came the headline that Micron's about to get banned. Make sense of that.
Okay, I cannot make sense of anything that happened over the weekend. He said that he promised a real thawing in the relationship between U.S. and China. Then Micron can't sell goods in China. About 13% of their revenues, I believe, come from China. So real question here. You could see those shares lower by more than 5% in pre-market trading. And then you have China's commerce minister coming to be the first senior Chinese official to come to the U.S. I can't make sense of any of this.
The stock down by a little more than 5%, as Lisa indicated. Sarah Wolf of Morgan Stanley coming up very shortly from New York City this morning. Good morning. Your equity market just about unchanged on the S&P 500.